gains on much larger capital. Whereas if you start a business, it can be harder to scale that, in the same kind of way.
Right. Now, one of the questions that I have that I think is kind of interesting, and this is to everybody in the panel, somebody's asking, what is the best amount to start trading? Like how much capital would you start with if you wanted to start trading? I know the answer to that depends, but I'm just curious what you think, and I'll chime in as well on that question.
Yeah, this will be a good one because I think we all have a little bit of a different perspective.
Yeah, we all have a different perspective. Austin, how about you? What do you think?
Well, before I answer that, let me just comment to the trading a way of life or just a job, because I agree with Nick a lot, but I also think that there's a different way to look at it that maybe is valuable to some people. Through my coaching experience, a lot of people that attach their worth to trading becomes a way of life for them because they think it's a way out. And that can be very self-defeating when they go through losses and drawdown, because now their self-worth is attached to these actions on candles. And then they go and they're an asshole to their wife or their kid or their neighbors. They don't need to do that. So I think you have to take trading seriously to the point where, like, especially when you're new and you're grinding and you're learning, I think you do want it to become a way of life. Like, it's much easier for a single dude that has no responsibilities to learn how to trade than for the married guy with 3 kids and a mortgage and this and that. So you do want to take it as serious as you can, where it kind of I think if you want to be successful in it, like the 4 of us, we're all very passionate. So it is a bit of a way of life where you're thinking about markets almost every day, but you can't hold it too tightly. That's the thing. So it is a job. It is a little bit of a way of life, but you can't have your life be dependent on your trading results. The worth of yourself be dependent on your trading results. So that's my take.
That's a good answer because my whole question was actually that, if I could make the same amount of money being a dentist, I would never be a dentist. In other words, like, it's more than just the money.
It's more than a job, but it can't be everything in your life. That's the key.
That's a really good point, because sometimes.
Yeah. So to the question about the amount of capital to start, my perspective now, having been someone who started with personal capital and I lost $40,000 in my first 2 years, I could tell you now the best way to start trading is with these simulated funding companies. I won't even call them prop firms. Apex and all these other firms that we all promote. They're a great way to get started. But is it the best way to scale? Arguably not. And Nick's a great example of that, right? Where, like, if you're someone who's just looking to make some extra money per month and also not take a lot of risk, that prop firm environment, that funding company environment is great. It's not the same prop firm model, I'm sure, that Blake traded with or that I worked at back at T3, but it's a new model that opens up the door for a lot of new traders to not take a lot of financial risk, to see if they have the passion for this. So I think the amount of starting capital, my recommendation is just don't start with your own capital, because you'll probably lose. Most people lose money when they just put money into a brokerage.
I'll take the opposite side of that argument for just a little bit. Like, I think it's great to do simulated stuff, and it's actually wonderful. We all do it, but I think ultimately you do need a little bit skin in the game. The question is how much. And my thought is that I think a reasonable starting cap, just to try the market, knowing fully well that you have to assume this is risk capital that you're going to lose, is between 5,000 and 10,000. That's enough money to make it meaningful. So you're not trading for pennies, but not so much, hopefully, that that it's going to hurt you. Do you agree on that, Blake? Is there a number that you think is a sweet spot that people who want to start with should trade?
Yeah, with? I do, and so I guess let me address a couple of these topics that you guys have been talking about. Is it a way of life? It is for me. Is trading a way of life? I mean, I take quotes with me to the bathroom, so and into the shower. Sitting next to where I'm, getting ready. So I'm fully immersed all week long in a 24-hour market. Sucks for my family. They felt it. My kids, their whole entire life, even off to college, they know what I do. So that's one thing. For me, it's a way of life, and I'm not saying that's the right path for everybody, but that's just how I deal with it. Now, as far as starting capital, it depends what you're trying to do. I mean, first of all, I think trading for anybody is a great skill to have, because you're learning not only technical analysis. Obviously, anybody can learn, how to read a chart. It's more of the macro themes and the thematics that are driving the markets globally. And the more you immerse yourself, the more knowledgeable you're going to be as you mature as an individual trader, as a person, as an adult. Starting capital, and it depends on what your end goal is. If you're looking to trade for a living, you better, starting with a prop firm, or simulated trading, however you guys want to call it, that's a great way to be able to leverage up what you have. But when you're, trading your own capital, you want to make sure you're just that's not capital that you're dependent to live on, at least not for a good amount of time. Because once you get to a point where you're like, I have to make money or I can't survive, your decision-making skills completely go out the window. And that is something that I've seen time and time again over the last 20 some odd years dealing with just retail traders and seeing people come and go. So it depends what your end goal is. And hopefully, and I like to just end on one last thing. Hopefully your trading that's not where you're solely dependent on your income. If you can I always love it when people have, full-time jobs, full-time work. They have, a spouse that has a full-time job, and they're not necessarily dependent on trading, especially when they get started. Then it becomes a different ballgame once you've had some experience. But anyway,
I would actually like go emphasize that point even stronger. And I wonder if Nick agrees with it too. I don't think, yes, in some unique cases, maybe you want to make it a full-time job. But I think the cool thing about trading is exactly what Nick is saying. And exactly what Austin is saying. It does not have to be. It's not a 9-to-5 job. If you're on the West Coast, you can trade New York Open at 6 in the morning. If you're in Europe, you can trade. If you're in Asia, you can trade the U.S. close at in the evening. The market is a 24-hour-a-day market. It can be completely a hobby that can be lucrative and fun without you having to essentially be vulnerable to it. And that is what I think is the best part about it. That's really the greatest part, is that there's no other activity that's 24 hours a day, 6 days a week, 7 days a week with us with crypto right now, if you guys want to get crazy with me. And that allows you participation and have a chance to make profits without you having to commit all your time and effort to it.
But then the more you trade, the more you realize the longer you're in the market or the more trades you take, the more likely you are you lose money. So when you're new as a trader, you think more trades, more time at the desk, more money, more freedom. I get my family and I get my time back. And it's actually not the case. Like Nick mentioned, you want to be big and in the market as little as possible. I mean, how many of us know a trader or have felt it before? I know I have, where it's like, you almost feel like you need to be, like the trade needs to scream, your setup needs to scream, where it's like, I have to take this. You don't want to be trading because you open yourself up to big risk when you're trading with good size, and those risks they hurt still, So I think,
can I jump in here real quick, Austin? And I was having this conversation with a trader actually yesterday, and a lot of traders in my community know this, and I'm just going to use a round number for everybody's sake, just so you guys have a number. Let's just say 10 grand. If you make 10 grand in a month, I asked so many traders, out of the $10,000 that you make in 1 month, how many of those trades, or out of the majority of it, where do you think the majority of that money comes from? And for me, it's really just a couple of great setups. To your point, Austin, if I look at my P&L over the course of a month, the majority of it really just comes from a couple of trades. The rest of it, and I trade a lot too, and don't think that I don't. You can go look at what I'm trading every day, and just go look at my positions that I'm running. But a majority of my money is just made in a few trades. So if you really just sit back and wait for those great setups, you can make your life a lot easier in the markets.
It's the 80-20 principle, like in many things, right?
I was going to say,
that's what this is.
You start with the Pareto principle. So
traders don't like that. They don't want us to say that. They want us. They think Blake trades the most, he makes the most, it's an oxymoron, right? It's like it's a trap. It's just like when you get into Forex trading, Blake and Nick, you guys know this. 24 hours a day market, 5 days a week. You can trade all day, ATM from your phone. But in reality, like Blake just said, when is the money made? In very small windows. When volatility is there and volume is there, you need the right picture to really move the market. Markets, a lot of the times, especially Forex, are ranging markets too. So when you, like Blake, last time we spoke, you had a sick trade on the peso. Like when you get those big moves in the market, that's where the money is then made, especially in, I think, Forex markets.
I'm running my biggest trade of the year, second biggest trade of the year right now. And it's literally like right at this moment in time. And when you're talking about, I have one other trade that matched it in January of this year. I mean, that just tells you,
everything.
Sustenance of what we're talking about.
Like, what's the trade?
It's long dollar CAD. I've been getting long.
All right.
Since last week.
Well, like I was talking to him the other day, and he literally wouldn't even look me in the eye. He was just watching the screen.
That's how you know.
Look at a dollar CAD. Guys, it's fascinating. I will take the opposite side of this conversation in saying that the Pareto principle is great. You're right. If you're running large, if you're not a scalper like me, everything you've said applies. But if you're a scalper, if you're a person who never goes for big profits, but goes for tiny little profits all day long, the opposite kind of is true. You do want to do a lot of trades, but the Pareto principle still comes into place in the sense that you want to do all those quick trades within 20% of the hours of the market is open. So let's say the market is open, I don't know, 18, 19 hours, whatever it is. There's only 2 or 3 hours when scalping really works the same. It's amazing how all of these principles, whether they're in a 1 minute chart, 1 day chart, 1 month chart, really are fractal. The truths are universal. You just have to understand what you're doing on each different time frame. But the truths are universal. So yes, you can do lots of different trades, but you also have to stop within 2 or 3 hours. There's only 2 or 3 hours in a day when scalping really works well. That's when you want to be doing it. It's kind of true. Yeah. Nick, I'm sorry. We've kind of boxed you out, but I'm going to keep going. I'm going to give you the screen now because, where this discussion is so interesting and there's so many important questions, but what I really brought you guys here for was to talk trades. So we're going to give Nick the screen first and let him tell us what he thinks is the best ideas for 2025, or at least one of what he thinks is one of his better ideas for 2025, with the market obviously in lots of different directions at this point. So be my guest if you if you can grab
Boris. How long do you want me to go? You want me to go 3 minutes?
I would say 5 minutes. 5 minutes each, guys, please, and then we'll wrap it up. Yeah, because as fascinating as it is, I could have you guys on for 4 hours just by yourselves.
Yeah. I know. That's why I asked how long, because all of us could probably go for an hour easily right off the bat. The reason I asked Blake specifically about his current big trade, a dollar CAD is a great one. Chris, if you don't mind just changing the screen to mine, just so we can take a look at this beauty here that Blake has got going with the dollar CAD. Austin also mentioned a lot of times the Forex market specifically is very range bound, but every once in a while you get these huge trends. I also heard Blake talking a little bit about the macro here in terms of fundamental analysis, which I get lost in that sauce every day. So I could go down a 45-minute presentation. You guys might be familiar with
more of a dissertation than a presentation, Nick.
Yeah, right. Kathy, her big macro outlook, her and I, if you're familiar with Kathy Lean, of course, she was on earlier. Her and I have a very similar approach to sort of observing the macro analysis out there. For me, when it comes to trade ideas for 2025, where I feel the most convicted, at least right now, and I too also to brag, to add on to the bragging train, I have a lot of small losses. I sort of reverse what Boris is talking about, where he's taking quick, profits out of the market. There's different styles for everyone. For me, sounds like I'm similar to Blake on this, where I like to catch really big, crazy winners very infrequently. And the downside to that is that a lot of times, when I have a ginormous trade, it's awesome. But then most of the time I'm just paying, little payments to the market, like trying to catch the right trade.
Right.
For me right now, when I go into next year, where I lean the most convicted is where I already am sort of positioned, which is I'm long Bitcoin right now, and it's going really, really well. Now, that being said, before I show you this trade that I'm in, again, I'm a big proponent of showing live accounts. I'm logged into my brokerage. I wish I could trade with Eightcap. I know this is an Eightcap event, but I'm long IBIT. It's a Bitcoin Trust ETF. I've got a huge trade that's going right now on Bitcoin, and it's one that I hope will continue, but I trail stops. So what that means is that, of course, when the market moves in my favor, I'm trailing a stop behind it. I'm using market structure to keep me in a trade. Basically my stop here is just behind this market structure. And when I talk about, best ideas for next year, I'm going to approach it with, generally speaking, the fundamentals component. So I'm going to try and squeeze in here why I like Bitcoin the best in about 3 minutes here. So if I take a look at the overall kind of outlook for 2025, I am going to spend most of my time here Blake mentioned earlier, I think it was like the technical side is pretty easy for traders, but the macro can be a little bit scary. But it's really the key to understanding why markets are actually moving the way they do, in my view. GDP in the U.S. is above trend. Growth is pretty solid there. PMI numbers, which are Purchasing Managers Index, these are the decision makers in corporate America. What their surveys are telling us, they're showing us that the outlook for the economy is upbeat for services. You take a look at manufacturing. This has been a slow component, but one can hope that, if under a Trump administration there is a boost in domestic manufacturing, maybe domestic manufacturing picks up. Who knows? We'll see. Retail sales numbers have been relatively upbeat compared to forecasts. And I'll get to the summary here in just a second. Jobs numbers, I know a lot of people made fun of the 12,000 jobs that got added in the last time around compared to forecasts at 106,000. But overall, jobs added, as if you took a rolling moving average, are relatively strong considering a pretty restrictive stance from the Federal Reserve right now. So yes, you had a bit of a weird error, or not error, but a weird data point. Some pointed to the hurricane as a big negative contributor to that. Unemployment claims are relatively tame. So what I'm trying to get at here, and I will give you the high level end result here in just a second. I'm just flipping through these slides. Job openings, it may be trending down, which job openings in the U.S., of course, you might say, well, that looks a little sketchy, but let's reverse course and look over the last 5 years. We're just sort of getting back to pre-pandemic levels. So the labor market seems decently strong. That's the summary that I want to get. Not only that, wage growth has actually started picking up a little bit. So people are getting a little bit of a bump in wages. That all being said, we also have seen inflation, if this chart will load, has been trending down here for the last few years. We've seen progress in inflation. The labor market seems to be holding up decently well. The Fed is looking to cut rates overall. Corporate earnings are smashing it. Companies in the United States are doing pretty well. How does that bring me all back to Bitcoin? A lot of times people say Bitcoin is not a fundamental thing, Nick. There's no fundamentals to Bitcoin, and I would staunchly disagree. Bitcoin is a risk asset. It does well when times are good. When it's in a fertile crescent environment for economic outlook, Bitcoin does well. When does it do poorly? When inflation is skyrocketing. Take a look at 2022 when Bitcoin had this horrible period of time. Now, I'm not a crypto maniac. I'm not a big crypto guy. I just like this as a risk asset play, and trailing stops in it into 2025 is my favorite current setup. Not to mention, one side caveat and one of the recent boosts is that the Trump administration seems to sort of be the perfect storm for crypto. You got Elon Musk, who loves to slide in his little Doge acronyms everywhere. You've got Trump, who I think he was the first president to make a Bitcoin transaction. So I think there's like a fun little story, but regardless of the presidency side of things, I just think you've got an environment, lowering interest rates, inflation coming down, corporate earnings strong, wage growth in the United States, decent outlook, I think, for Bitcoin to do its fun and games and do its thing. Now, if I'm wrong, at the end of the day, I'm trailing stops and I will take my profits if this thing reverses, but I'll probably look for continued upside. And I'm trading this thing from a momentum perspective. So that's my favorite setup for 2025. It's high risk, high reward, trailing a stop and keeping
trailing a stop. And any sort of mental target, you looking at 100,000 beyond,
Nope. I wouldn't claim to know where this train stops if it keeps going.
One quick question on that. Do you scale out of your trades? Do you take partial profits? Oh,
nope.
You're a beast.
All in, all out, trail stop. And the big downside,
you are this is something I could never in a million years do. You are a beast.
Well, everybody has their thing, the biggest downside to that, Boris, is that might sound great to the listener. They're like, well, Nick, you got this great example trade. I just need to be doing that. But what I pay for with this is I've got this crazy trade. The P&L looks amazing. I'm paying $4,000 for a loss, $3,000 for a loss, $5,000 for a loss in order to finally capture that big explosive move. So what you have to understand is my equity curve. I'm just going to use the trading view thing here. Actually, I'll just open up my pen. What happens is my equity looks like this. I'm just getting chopped to pieces, and then I have this big runner, and then I'm chopped to pieces, and then I have big runner. And that is very understandable that a lot of people don't like that style of their equity. People prefer I think, more like this, and then they'll get
and then
back
I break it up like that. That's my equity curve. That is literally my equity curve. My equity curve is the exact opposite of yours. All right. Well, thank you so much. Bitcoin is awesome. We're gonna give Blake the screen next and let him run his story. I wonder what he's gonna pick.
First of all, I got to start with the biggest trade of 2025 and beyond. I'm most bullish trading in general, and that's not my saying. That's a saying from a friend of mine, Tommy. But I am extremely bullish for the next 20 years. I think these markets are going to be trading markets, and I think you all are in the right spot. Let's just put it that way.
Wow, that's very cool. I think we need to make a new T-shirt from TraderFest. I'm bullish trading.
Right, exactly. And and Nick, thank you for referencing the charts. And this is one of my accounts where you can see this is just the big breakout in the dollar CAD. It is a big breakout, and a lot of this, when I run trades like this, they're just for whatever reason. Like this one in particular is just because of positioning. I don't know if you guys have seen retail positioning is that there's 95% of traders in Oanda or excuse me, Forex.com short.
Right.
You go to MyFX book, 95% of retail traders are short. You go to the CFTC data, it's the most historic hedge fund, short Canadian, long dollar CAD basically position in history since the 80s. So you got leveraged money, professional institutional money that is balls to the wall, short Canadian dollars, and then you've got every retail trader from here to Bangladesh shorting dollar CAD, long Canadian. My question is, who's going to win? Well, obviously, we're just seeing them continue to squeeze, and they're going out this weekend not knowing who the U.S. Treasury Secretary is going to be and being short dollar CAD, which is bonkers to me. Just bonkers crazy. Anyway,
Blake, can I interrupt you just a second, just to show what you just mentioned, because you made such a good point. I want people to just see what you said. Krista, could you just show my screen for half a second? Canadian dollar on the COT report, as you just mentioned, massive shorts, right? And then to just go back to the retail side of things, you mentioned that retail sentiment, retail traders very short. I didn't mean to interrupt. I just wanted to add a visual to what you just said. It's really key.
Yeah, no, that's a wonderful visual you have there. And that's the thing. When I trade, I love seeing. I guess let me explain it this way. I love when people get offsides, because when they get offsides, that's when trends can really accelerate. And I don't think the retail market is so big to where it's going to create this big move. But what it does is it tells me once they start closing out all their shorts, that's the time that I'm going to start basically closing my long dollar CAD, is when I start to see retail positioning, when I know all the traders at home, at work, and that just kind of do this for fun, or maybe some of them don't even do it for fun. They just but they just happen to be off sides. That's when I'm going to be closing it out. But I want to talk about what the best trade I think of in 2025 is. And that's contrary to me being long dollar CAD right at this moment in time. And long dollars, not only just against Canadian, I've got a few other dollar longs that I run myself. And by the way, if you're in our community, you can go to the trades room and you can see what positions I'm running at all times. So I keep, just not just myself, it's other traders too. It's everybody kind of posting what they're doing in here. But the best trade, I believe, is going to be short dollars. And even though I'm happen to be long right now, I'm long for political reasons. But speaking of politics, if you guys were listening closely to President Trump and JD Vance, they want to engineer a weaker US dollar. And I still am questionable. It's questionable to me how they're going to make that happen. But I do believe that whether you're talking about the dollar index, trades to new, multi-year highs.
I mean, dollar Swiss is always a good proxy for the dollar index, in my opinion. So
it is, and it's been running hard, and I actually think Switzerland is going to be one of those currencies that kind of acts like the yen. Once tariffs are in place, as more of a risk off type of indicator. But I mean, there's a lot of reasons to be a dollar bear. I do think that the U.S. economy, along with the global economy, is going to slow, but to a point where yields eventually have to fall. And the bond market is you listen to a lot of macro guys, they'll say it's uninvestable. It is uninvestable until it isn't, meaning that until everybody needs to run for cover, they will come back to the bond market. Yields will slide, and the dollar will suffer as a result. But that's what I'll be looking at really to engineer when I'm looking to sell dollars. Right.
Very good. Right.
And then the other thing about the dollar is, debt level servicing, and that is how I believe the Treasury Secretary and President Trump, incoming President Trump, is whether it's austerity measures that no one's really talking about, debt restructuring, which may have to happen. Those are things that are going to eventually weigh on the dollar. And one thing that everybody forgets about the political environment, everybody thinks, it doesn't matter, who gets elected. Fiscal spending is just going to continue to increase. But people forget that Donald Trump is in the Republican Party. And even though you might call him a rhino or, Republican by name only, a lot of them are very conservative. And the path to getting more fiscal spending is going to be very difficult for this incoming administration, especially with so many old school conservative Republicans on his side. I have a hard time to believe that we won't actually, we'll see less fiscal spending than we have in the past. And that is going to eventually weigh on the U.S. economy, which therefore is going to weigh on the dollar yields and so forth. But
thank you, Blake. I just have to. This is a very interesting idea. I love the idea. Okay. I just want to turn the mic over to Austin because he's got. Out.
Time wise. Yeah.
And I want to make sure, but fascinating. Thank you very, very much. Really, really cool idea. I definitely agree on the weaker dollar. Trump is a mercantilist. Austin, my friend, what do you got for us?
I'll keep it simple. I like both of their ideas, especially Nick. I like,
I'll take one of each.
Okay. Yes. I'll take one of each, please. I'm going to actually take the opposite direction a little bit here. I think I'm going to talk about crude oil. I think we're sitting at a really important point around $67 a barrel. And I think with Trump saying he's going to drill, similar to what both Blake and Nick echoed, I'll say if Trump can fulfill what he says he's going to do to hopefully, stimulate the American economy, Blake says there'll be some slowing. I think he'll still try to drill, which could drop prices of oil for us. So could we see $60 or less per barrel? Well, we're at a key level, I think, here that's been support, just under $70. If we still see selling pressure, since Trump took office, we've been a little bit more bearish than bullish, especially on the recent daily candles here. So I think crude oil to the downside is probably one of the directions that I'm looking to take advantage of going into 2025. We've been talking about this a lot on our streams here on ASFX TV. If you go back and rewatch almost any of my streams, we're pulling up Bookmap, we're looking at order flow, just trying to watch crude oil to see if there's anything big coming. But I think it's more of a macro play. I'm not a macro trader. Blake is an incredible macro guy. Nick as well, great swing traders. I'm a day trader like you, Boris. So I'm going to still be down nitty gritty in the dirty candles like you. But I think bigger picture, crude oil to the downside is something I'm going to be interested in watching for sure.
Well, I have Chai Girl coming up in the next segment. She's one of the most preeminent energy analysts. I'd love to know what she has to say about that. But it's a very interesting call. So I want to summarize before I let the guys go. Blake is short dollars in whatever permutation you want to take it. Probably dollar Swiss is as good a move as any. He's also a short-term long dollar CAD on just pure positioning. And I have Jason Shapiro, who is the master of positioning. So we're going to talk to him a little bit about that as well. Austin thinks that oil goes to 60 as drill comes into play. I'll add another idea to Austin, which is that electric vehicles are getting more and more market share. That's taking a lot of demand off gasoline off the market. That's also
100%
going to be a way. Blake and Nick is, as we like to say, balls to the wall, as my friend Jimmy, who's going to come on in just 1 second, long Bitcoin, which is really interesting. And that's going to be a super, super interesting trade.
And just to add something, Boris, to the oil conversation, just very briefly, is that and let's all hope, whether you in the audience, us four, whether you like or dislike Trump, let's fingers crossed hope that there's more peace in the world in the next few years, which drastically would also reduce oil prices because there's always a premium in the price of oil when there's wars going on. So fingers crossed, let's hope.
I think it's a real possibility. We're definitely hoping for geopolitical peace. That's like, everybody's on that side of the trade. Absolutely, 100%.
Global peace and no more old guys boxing young guys, right, Nick?
Yeah, that's right.
I'm so upset, honestly, but anyways. All right, guys, thank you so much. I really, really appreciate it. I'm going to take just a couple of minutes before I bring in our next panel to take the screen back, guys, and show you my, where's my stuff here? Oh my goodness. Wait, hold on. I lost control.
Good to see you both. Thanks for having me, everybody.
Yeah,
Nick,
so
Blake.
much. Yeah,
good to see you guys too. Thank you.
Yes, and of course, everybody go visit them. They got amazing stuff there. Okay, give me just 1 second. I gotta find my stop screen. Where's my screen? Present, share screen. Just bear with me 1 sec, guys. Okay. All right. So I'm going to take a few minutes here because I'll let our other panel come in, because one of the things I'm going to be talking about with the other panel is edge, and there's very little, possibility of edge from all the other areas where edge comes from. But one area of edge that is, as from a trading edge, is just simply execution, simply doing things better every single trade. And this is really what I wanted to show you. This is what I've designed for you. This is what I want to give away to you, because to make your life so much better, which is this. My Flash Trader Plus, as I said to you, I showed you the simple version for those of you who just want a simple entry technique, is great. But this one really takes it to the next level. Let me show you what this thing does as a tool here. I'm going to put it on Bitcoin on both sides of the market. So just like in the prior example, this thing can buy and sell with a very, very quick stop loss and a break even. But this is where it gets really, really cool. For those of you who are not just scalpers, but want to be swing traders, this particular version of Flash Trader lets you, and let's do 1,000 stops here, because Bitcoin is obviously like a really, really big trader. So what we're going to do here is that right now I'm setting up a trade with 1,000 stop, 1,000 first target, and 1,000 second target. Now, the thing that's very cool about this little applet is if I just put this trade in here right now, and if the trade goes 1,000 in my direction, which obviously won't go in the next second, but if it does, right? As a matter of fact, it's actually going against me, right? Let's do the same thing on the sell side, so we can have both sides of the market. It will go to break even automatically. You will take a profit and go to break even automatically without you doing anything. Do you know how? First of all, that's obviously best behavior trading number one. You take partial profit, you go to break even as a thing. Do you know how annoying and tedious that is to do manually, and how beautiful it is to have this done mechanically? So if I'm selling Bitcoin over here, right, and I'm buying Bitcoin over there, and if it goes a little bit in the money, like right over here, close half, look at this. It goes close half right now in the money. It's now at break even. I have no risk, and as you can see, it took me out of the trade with the stop, because Bitcoin has a really, really quick retrace. But my point is that imagine this on a longer term time frame, where you can take a partial profit and be at break even completely on your own, right? Although without you doing anything else. In addition to which, this thing can also do a whole bunch of other stuff that's really cool. For example, you want to make a pending price over here, and you want to say you want to buy, like, I don't know, 1,000 points above the current price. Well, now it automatically puts up a buy stop of 1,000 points above the current price. You want to do that 1,000 points below. You just simply say minus 1,000. It automatically does it like this, right? Which is so cool. You want to adjust your take profit to just maybe one single point, which this isn't going to do it with Bitcoin, but let's say 10 points over here. It will immediately take the first profit at just 10 points in target. All of this in a super clean, easy, nice fashion. Last thing that it will do, which is really, no, there's two other things that it will do. It will, first of all, let's say you want to just close everything out. I want to close out all my positions. Look at that. Boom. I closed everything out in one single set. How many times have we been in a situation where we go long the market, or we hit the wrong trade, or we have 5 positions on, and I can easily put if you guys want me to, I can easily put 5 positions on, and I'll show you. I could show you, here. I could show you with Ethereum. Like, let's say I put a whole bunch of Ethereum positions on right here, right? And now, oh my God, I have all these positions on. I got to get out. I got to get out. I got to get out. Close all. Boom, 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 boom. Tell me that's not amazing. Tell me that's not so much better than you point and clicking every single thing, or you going crazy on the chart, or somebody calls you and you need to get out of your positions because you have to change your focus on everything. Look how nice that is, right? In addition to which, if you wanted to, this can also keep a running total of how much money you've made or lost. You can just go in the back here. It's turned off by default, but if you want to show your daily total over here, just simply change it to true, and it will tell you what your P&L is. And the last two things that it does, which I can't even show you now because we're in the middle of the weekend, is you can set this to close all positions before the weekend starts. You know how sometimes you leave a position on and it's before the weekend, especially like with equities, you're long NASDAQ, or you long US 30, or you long S&P, and you're like, oh my God, I don't want to be in a position over the weekend, especially with new president coming in. The president is always known for making lots of weekend commentary that can blow the markets up the other way. This thing in the back will automatically know when the weekend is happening on your broker, and it will close it off automatically if you set it to true. Or if you're trading Forex and you want to get out before the roll, right? Because you don't want to be punished. You don't want to pay roll. If you're a day trader in Forex and you hold your position through a roll, it's almost always you're going to get killed on getting charged roll, right? And a lot of times, if you're holding a big position, $2 or $3 million worth of Eurodollar, it's like $300-400 of unnecessary costs. So imagine if you program it to say to yourself, hey, make sure that 10 minutes before roll hits, I'm out of all positions. I don't want to be paying roll. Beautiful, right? All of that I did because I know these are little details that we all hate to do. These are all little details we forget. These are all execution mistakes we hate, right? And why force us to do this? Why not let the robot do it for us? That's my gift to you. Thank you for coming to the show. I made this robot for you. The link is going to be in the comments. You guys are welcome to get it. The link will also be, I'll post the link in my Twitter, so you can go to FX Flow to download it. 100% yours. Enjoyed. Any MetaTrader account that you have, you can trade it, and hopefully, if you like it, you'll come trade with our friends at Eightcap, who made the whole thing possible for me by making me letting me have all the budget to program all this for you. So I hope you guys really like this. That's my big offer to you guys, and I hope you fully enjoy it. Now let's see if all my friends are in the room here today. Let's see who's here. I see Jimmy. I see Tracy. I see Deli. So I'm going to stop sharing, and I'm going to say hi to everybody. Where is everybody? Hi, guys. We're all coming on board here.
Good morning.
Good morning. Good morning. At the stage. Where am I? There I am. Hi, everybody. Hi.
Hey, guys.
So
easily the best looking panel you've had all day, Boris, just so you know.
The best looking channel I have all day, especially with Chai Girl here, of course. Hi, guys. I tell you, I've been so looking forward to this particular panel. Every panelist has been awesome, but these guys are especially cool because, for those of you guys who remember the great old trading stories when people, when men were men and women were women, when everybody used to trade in the pits and markets were actually face to face and human being to human being, and people used to punch each other and jostle each other. Well, the coolest part about this panel is that every one of the people that you see in front here has actually been on the floor, has I'm sure gotten punched and punched back, including Chai Girl, and has probably some really interesting ideas to talk about. So without much ado, let me introduce everybody around the room here, starting with the top. On top is Anthony Crudele, who is a man who needs no introduction. He runs a lot of things these days. He's sort of like a content media machine, but he runs Futures Radios. His YouTube channel, at Anthony Crudele, an absolute must stop for lots and lots of great trading content. A lot of traders. He's got a podcast. He watches everybody. He really, the great thing about when Anthony interviews people is because he's a trader, he really asks the right questions about what trading is all about, what people are thinking about. So Deli, welcome. Great to have you aboard. And then of course below we have Tracy Schuchart, who we're going to definitely talk about energy with and metals with, because she's one of the preeminent sources and preeminent voices on energy. Tracy these days is works for a family office for Hightower Associates and does a lot of analysis, and actually works with the other panelist over here, Jimmy Jude, known as the Merc Jerk, which he likes to call himself, who is one of the funniest voices on Twitter you will ever see, who will just go toe-to-toe with anybody, no matter how big they are, and tell them to go F themselves if he thinks that they're wrong. And of course, he's got a ton of stories to tell us. Welcome, everybody. Love to have you aboard. Say hi to me, and I'm going to just roll our question boards. Just 1 second. Just give me 1 second, and I'm going to get our questions going, and we'll start the conversation because it's so much fun to have you guys.
I can't believe all three of us showed up, by the way.
I
for 9 o'clock in the morning on a Saturday. Are you crazy?
I mean,
I must say, when I saw like around 8:50 and only Jimmy was in the room, I'm like, oh, I better start vamping. But no.
Tony had to wake up at 6 a.m. just to do the hair. Are you kidding me?
There's a lot of prep that goes into this, Jimmy. There's a lot of prep, baby.
Oh my goodness. No, it's awesome to have you guys. So hi Tracy. There, the guys are talking over you, but I know you're mighty but strong. You're like my daughter. You may be small, but she's mighty. It should be your motto, right?
Right.
Anyways, guys, good to have you with us. I'm going to just dive in because I got to tell you, there's so much to talk about. I thought, I'd have all this, leisurely time. We're just going to dive in. Forget the introductions. Everybody knows who everybody is. Let's talk trading because this is what really it's all about. So my first question to everybody is chase versus retrace. What I mean by that is, are you a breakout trader or are you a buy the retrace trader? I'm fascinated to know the mentality of each one of you. Both on maybe on a short-term basis, and don't tell me it depends. If it does depend, then tell me what it depends on and how you would trade it. But I'm going to go to Deli first. Are you a chase trader or are you a retrace trader when it comes to trading?
First off, I feel like I'm on a game show right now, don't you, Jimmy? Like looking at this, I'm looking at this going chase versus retrace. I'm like, am I going to answer this question right here? So for me, I am always retrace.
Okay.
No, I know. I'm just messing around.
Okay.
For me, I'm always retrace. I wish I was chase because in this market, it feels like chase is getting paid a lot more than retrace, and retrace is a lot harder. Right. But I'm really built for a mean reversion trade, and I'm built for like trying to go back with trend on a mean reversion move.
Right.
But watch that they're paying people for chase versus retrace, but I'm retrace.
Interesting. Definitely a good point. What do you think, Jimmy? Chase.
I'm the exact same way. I'm retrace. And I like, the funny thing is Chai is probably a breakout trader, a lot more. I know she is a lot more than me. I don't know if she does both, and she's shown me this year, I've always been the type of guy, like, don't be afraid to miss the move, wait for the retrace. And, you miss the move, you look for the next setup. But I've really seen, especially trading commodities this year with Tracy, that you have to be aggressive in a lot of these moves. You got to jump on them. You gotta, buy that breakout. Because there isn't a retrace in a lot of these products. They just go, and by the time they do retrace, that the move's over, and it's it's done. Yeah, so I'm adapting, but I've always been a retrace guy, but I'm adapting, and I'm seeing the benefits of adding that more aggressive breakout move to my repertoire just by watching Tracy operate.
Really interesting. So Tracy, Chai Girl, tell us, you know, I know why these guys are retraced, but tell us why you're Chase. I'm curious. Is it because you're just a better trader than they are? No, I'm kidding.
No. You know, I think it's with, you know, I mainly trade commodities and, you know, equities and commodities. And so, you know, again, a lot of those move breakout. I like to see like a breakout and then a little bit of a retrace of the breakout, then to get back, then to get into the trade. But again, a lot of these moves in commodities, you just kind of have to jump on. Right. And so, you know, and if it does retrace, you know, you could always leave, you don't have to put a full position size on and just go for the gusto every time, right? You can leave some room to add if you do get that retrace that you're looking for.
Interesting. I think this is a really interesting point from like a whole bunch of levels, that if you come from a commodity market, commodities by their very nature are kind of constrained products, right? Like, you know, when there's a shortage, there's just no price high enough that you can pay for it, and when there's a surplus, there's no price low that you can pay for it, right? And I think that type of dynamic naturally creates much stronger breakout markets. Generally, you know, there are periods like in the late 90s when commodities were just in a range-based market and it killed every breakout trader. But from a equity point of view, I think all of us who, you know, have made markets, the thing people don't understand is that market making mentality, you're always selling the offers, you're always buying the bids, you know, whether you're doing it on a scalp basis or even on a longer term basis, because we're always trading against the crowd. It's just how market making is. Market making by its very nature is mean reversion, right? In terms of doing it. And I think because we've just been trained in that methodology for so long, it's very hard for any of us to like just go with momentum. Would you agree, Jimmy and Anthony?
Absolutely. And you know, markets morph too. And right. You know, there are certain times when, you know, you want to be more aggressive. You want to, you know that, you know, you're in a market where, you know, the train is leaving the station and you know, this might be your only spot on, you know. And then there's times when, you know, markets are grinding and choppy and stuff. So, you know, it's always a process of morphing to what's in front of me when I trade. You know, I never marry to one thing or the other. I do, like, naturally, I do want to be patient. I do want that perfect spot. I want that retrace, you know. But, you know, it's there is no one, you know, fit in trading, you know, like, especially if you're a scalper or a prop trader, you know, you don't leave any stone unturned with your trading. You know, I'm always trying to do trades that make me uncomfortable. You know, like breakout trades make me uncomfortable. I try to force myself to do them. I try to get, you know, but you know, I realize it's not really my game. So you know, but I never say, you know, there's a certain thing I don't do in trading, you know, like that's you know, I would never try that. I'm not that guy or whatever, you know. If it's out there, you know, I'll work on it. I might not be great at it, but I'll work on it.
Right. You'll try sushi once, right? Is what you're saying.
Absolutely.
Anthony, you know, do you agree with me that it's our innate, like, just from being on the floors, that you're naturally forced, you know, you kind of buying bids, selling offers, that mentality, just, it's hard to break that mentality and buy breakouts all the time? Or have you matured, or do you have like a different perspective on all of this?
Well, the difference is, like, on the floor, if you bought an offer, is because there was bids coming in and you physically could see them doing it. So you had a lean. Right. And I don't feel like I have any edge. I heard you talk about that in the last segment, like buying into a rally. I mean, I like the only like kind of like retrace fade chase move that I like is the moves where, I mean, I lost it on Friday, but like when we rip lower in the market because the trend has been higher, I like to fade that breakout lower and try to buy something into weakness for a rally. So it's like, instead of chasing it, I would fade that chase lower. But I just think that, you know,
Well,
in this market,
you're buying the retrace. You're still fading. You're fading the dip. You're buying the dip because you think it's gone lower. It's hard to break old habits. You are definitely, you know.
Yeah, like I won't buy into it at the rallies. It's funny. It's like, you know, I look at the rallies. I just think it's so hard for me to manage risk. The minute I just feel like I have a weak hand. Every time if they start to go my way, it's either I want to take profits immediately, or when it goes against me, I can't hold it.
You're like, oh,
I
my
know
God,
that's not structured.
I knew I bought the top. I knew, but I'm the same way.
Exactly.
I totally
feel that. I feel that all the time.
Yeah. Another topic that I think is near and dear to every trader is stop, no stop. So, you know, I come down obviously on hard stop. You know, I'm a scalper. There's nothing. But what I will do is I'll stop. I'll go again. I'll stop. I'll go again. I'll, you know, hit me again. But I will always do it with a stop. How do you approach your trading?
I mean, I don't know how you could trade S&P or NASDAQ without a stop. I mean, I think it's crazy if you are.
Sometimes people will say, well, I'll come in here, and if it comes in, I'll add a little bit more because, you know, I heard Tracy talk.
So like a mental stop. I mean, I do that sometimes in the S&P, not really in the NASDAQ, because usually if I put a stop in the NASDAQ, I'm putting it wide enough, and I don't even care if they one tick me because I've been burned too many times not to have it. But that's why a lot of times I've been using options now, just because if I want to be in an area. You know, I've been trading some NASDAQ options lately as well. I like them because I don't have to use a stop. I just bought the trade. And so I can try and make it work. But if I'm trading any sort of future, I mean, the only time I won't have a stop on is if I'm trying to like turn and burn something real quick. And I know that I don't want to basically have a hard stop because it's just too fast for me to do it, which is rare, then I wouldn't put it in. But mentally, I know where it is, and I'm disciplined enough to just burn out of it if I have to. But that's a rarity.
Interesting. Yeah. NASDAQ reminds me of that South Park episode where the guy goes, and it's gone. You know, like where the guy like gives money to and it's gone. That's like if you don't have a stop in NASDAQ, and it's gone. What about you, Jimmy? Stop or no stop? And I know you're coming from an options perspective, and you know, so I'd love to hear your nuanced view on all of this stuff.
And I'm with you know, Tony on this. You know, options are a great way to have a natural stop in, you know, especially if you're, you know, buying a put spread or buying a call spread. You know, you're defined your risk, you know, what you've laid out, what kind of premium. But when I'm trading futures, I usually put in a stop that's like outside of where I want my stop to be. Just for like that blowout risk that just, you know, something really silly happens. And then I have my mental stop and I watch the action, because a lot of times it'll be like a timing thing as just as much as a, you know, where the market, you know, is trading. You know, if it lingers too long, you know, if I feel like it's an area that, you know, the market should tap it and go, or, you know. So I do have there is a mental stop. I don't have hard stops. My hard stops are outside my mental stops. In order not to get totally yoked on, you know, on a ripper, you know. So I'm covered. I'm a stop guy. I'm covered, but you know.
So you have an emergency. You have an emergency stop. You have like an emergency stop. And then I'm just curious, on an intraday, you know, trade, what would be an emergency stop on the S&P? 50 points below, 30 points below.
Probably 15 handles, 10, 15 handles, you know, like
that's not a lot.
No. And you know what though? I'm pretty, you know, like when I come into an area, I know I'm usually pretty accurate. If I'm 10, 15 handles away from where I should be, my thesis is probably wrong. I'm just probably in the wrong area.
Got it. Interesting.
And there's also time. I also have a time stop in my head a little bit too. Like if it's not working, you know, I'm with Jimmy. My buffer is always a little bit outside my stop. And so I kind of account for that because I'll probably blow out of it before it gets to my stop if it's not working. But I really do have a time stop I used to look at a timer. I don't anymore because I've stretched my time horizon out a little bit. But if I get into something and I see that it's just not working or it's like churning against me, then a lot of times I just blow out of it too.
What's a reasonable time stop for you on intraday basis? Let's say on NASDAQ, is it 30 minutes? If it's not working within 30 minutes?
Oh, no. I mean, I'm really only doing 1 to 2 trades a day. So, I mean, if it's not working, I would say I would say in the first, I don't want to say immediately, but it's like, I know if I buy an area, go back to what Jimmy said, if I feel that I'm pretty accurate and it's just not working, like if I buy something, it's just like, all of a sudden it sits there and it's just grinding against me, or it's just whipping around an area and I look at the action, I don't let things play out too long if the initial response is not what I wanted to see. If the initial response is what I want to see, then I'm aggressively I'm adding more, or I'm even trimming it. If it's not what I wanted, I might be trimming it off towards my stop. And so there's that as well. Interesting.
Tracy, what about you? Because I know you're obviously trading, I think, a little bit on a longer term basis. How do you handle the issue of stop, no stop?
Yeah, I do handle a kind of a longer term basis than just scalping anymore. But I, again, I use options just like that, particularly with oil, because I just think it's been range bound and it's been a better trade for me to do options on oil lately. But as far as the stop is concerned, I have a mental stop. So where I want to be. But again, I'm swing trading. So
you don't necessarily like
a lot more room.
Swing trading, that means you're like holding for sometimes maybe a week, right? It's not like you're going to get knocked out in a half an hour. Is that what you're saying?
Exactly.
Okay. Because you're trading sort of like like longer term moves in oil and gold. Like we're talking, I talked about gold. We'll talk a little bit more about it. How you're obviously trading for like the 3,000 level, not for the next $20 level kind of thing. Yeah.
Right.
Okay. Cool. All right. So here's a question I have for you guys. I'm gonna give you my view, which is probably completely opposite. And I know it's definitely opposite of Tony's. Is size a superpower, right? So every time I have lost money is because I started too big, right? I never, it doesn't matter how stupid I am. If I'm small enough, I can't be stupid enough to lose it all. It's sort of like been my lesson. So I start super small lately, like micros sometimes, not sometimes, but a lot of times micros. Because part of my approach is that if I'm wrong, I get bigger. Not everybody needs to follow that methodology. People see me trading live every day, and it's enough to give lots of people heart attacks. But the point is that I forget strategy, forget tactics, forget reading the market, forget this. There's a million things that I will get wrong all the time that I cannot control. But the one thing I found that where I have a modicum of power is size. Agree or disagree? Tony first.
It's amazing how much you learn from a one lot.
Yeah.
You put a one lot on, it changes everything. You are so much more in tune with the market. Because I'm not systematic, I believe that position sizing is everything.
Right. But what's unique about you is you get bigger the more correct you are, right?
Correct.
Which is, that's the right way of trading. I get bigger the more wrong I am, but I'll get into a position. No, because I'm trading mean reversion. I'll stop myself out. It's not like I'm letting the inventory accumulate. The worst thing to do in the world is let bad inventory accumulate. But the point is that it's whether you always want to start probatively and then go forward, right? I don't know, Jimmy, do you agree? I know, Jimmy, you've done huge size. You've been sort of like, you've had trades where you've gone in large at the beginning just because you have strong conviction on the trade, right? So maybe you have a different point of view.
I started right away trading really big, but completely clueless. It was just happened to be my first job. you know, and on the floor, my first trading job was trading for this group that was trading massive. And they were like, hey, get in there. You're 1,000 up. And I was like, all right. I didn't even know what 1,000 up meant. I was just like, you know, when a broker would ask me, I'm like, yeah, 1,000 up. You know, it was like, whatever.
I feel like with you is like taking the 18-year-olds into battle because they're too stupid enough not to run into bullets. It's like that. I feel that's how they
absolutely. It was just like this, like this math game that I played every day, and you know, with like and checked out my high score and stuff, you know. Right. But through the years, you know, through like talking with a lot of guys and then like converting over to electronic because it was completely different, you know, sizing in the electronic world and determining that because it, you know, it was really up to you. You could do whatever you wanted, you know. You weren't on the floor. You were kind of, you know, the brokers could hit you with whatever they wanted, you know, so you were never really in control of your size a lot of the time. But as soon as you got in front of the screen, it was like, you know, the world was your oyster. So, but a lot of guys, like the best traders in the electronic firm that I went to, they all traded really big and they always traded their size, period. And a lot of these guys were trading like 250 S&Ps at a clip. And they would say, and the owner of the company would actually make, like, if you went up in size and say you got to 50 SPUs or 100 SPUs, he'd say, listen, that's it. You trade 100 SPUs. You know, that's your size. I don't want to see you like a 10 lot and a 20, you know, that's it. And the thought process was that, you know, you wouldn't just go half-ass into like an idea like, this spot's all right. Or you would, you know, like, well, I really want to buy him here, but you know, it seems like it's stalling out. You're not clicking in on 100 SPUs on like a tweener like that. You know, if you're going full size, you're going, you know, you're waiting for your spot. It's, you know, you've got to be positive about the setup. So that's just how I learned. And I kind of took that with me. Now I have fucked around with, you know, what I've often found is like, if I fuck around and start with small size in the morning, I'll trade like really well. And then I'll increase my size and I'll get smoked. And then it's like, now I'm in this like weird no man's land of like, all right, what the fuck do I do next? You know, I almost have to shut the computer off and start on the next day. And because it's, you know, I lose my point of reference at that point if I'm flipping around, you know, different sizes. So for me, it's big, and that's it. It's one size.
Right. Yeah. But here's the caveat that I would say for everybody who's listening. Absolutely, all approaches are legitimate, but there's a key distinction here. When I'm trading small size, it's because I'm doing 100 trades a day. That means I have zero idea if my trade is going to be successful. That's precisely it. I am doing a lot of fuck around trades. That's the whole point. That is why I'm always starting at tiny probative size, because I don't have. There are occasions, maybe there's 3 or 4 times during the day where I have 90% conviction, but most of the time I'm like at 45% conviction. The point is I don't quite know. It's a tilt. What Jimmy's talking about is, if you're going to do size, you better be 90% confident that is the space you want to be in. This is, size is not for fuck around trades. So that's the key, I think.
And that's also your style too. You trade a lot, you scalp, and you know, that's a different style. I don't trade that much. I'll trade maybe a couple times a day, max. Sometimes I won't trade during the day. The opportunity just won't present itself. But I will see, like every day you can scalp and you can be in and out of the market, and that's your style. You trade a lot, right?
Right. Yes, I do. Yeah. And that's the whole point, is that every day is lots of tiny little opportunities, but you don't know, where the probabilities are. So you have to do a small size. It's kind of like a retail version of high frequency trading, where you're doing small size, lots of bets. Yeah. That's the point, is that you can do both, but you have to understand what you're doing to start with in order to be correct with that. Speaking of understanding what you're doing to start with, Tracy, you said something interesting about size, that you'll take the breakout, and if it comes in a little bit and you still have confidence in the trade, you'll add to the position. Can you talk a little bit about how that process that you deal with?
Yeah, absolutely. I mean, I prefer not to start with a huge size. And again, I totally agree with you. I think micro contracts are great because they allow you a lot more flexibility when you're trading, because you can put more on, and that way that gives you room either to add more or to scale out more.
Right.
And so I think micros are great,
Right.
particularly for newer traders, because it just gives you a lot more flexibility as far as your entries and exits are concerned.
Right. And of course, you know, for all of our overseas people who are listening, the beautiful part about CFDs, the great part about trading with our partner Eightcap, is that size is completely dynamic. You could go granular to be, you know, futures have a sort of a minimum size, but CFDs don't. You could literally trade for pennies if you wanted to, and that's I think just a very important point. You don't have to be big all the time to win, and you know, having small size is interesting. So next question I want to talk about a little bit is especially for discretionary traders. I think everybody on this panel is kind of much more discretionary. Whenever I hear discretionary traders like describe their strategy to me, and then when I actually see them trading, it's like two completely different things. Like my view is that the real edge that most people develop over time is less about their strategy and much more about their technique, right? About what is it that they, you know, what little tricks of the market that they find about price levels or entries or their own personalities that help them adjust and, you know, win more, lose less, or lose smaller, win bigger. Tracy, what do you think about, you know, do you agree that there's a lot of technique rather than just pure strategy in what you do, or at least some technique over the years that you've developed?
Yeah, absolutely. I mean, I think I kind of think they're one and the same, right? Because your
well, you know, strategy is like, you know, I'm going to go long when 200 SMA breaks. That's it. Sort of like, you know, very hard and fast rule that they can be logically encoded. And my point is that a lot of times people say, I'm going to go long, but then it comes below. I'm going to be actually a buyer because it's a dip, not a retrace. And then I'm going to add, like, there's just lots of nuances that people do around their core idea that isn't really the core idea. Like, that's why a computer cannot replicate a proprietary trader a lot of times, because they are very literal, and human beings are much more nuanced about that. That's the nuance, I think, is in the technique. Would you agree?
Yeah, absolutely. I mean, I think it depends. If I'm trading equities, I have more of, you know, if it breaks this SMA, I'm, you know, going to short it, or, you know,
you're much more systematic.
That's more of a strategy trade. Whereas if I'm trading futures markets, probably more of a technique trade.
Huh. Interesting. So do you think it's because of your own personal breadth of knowledge of the commodities markets, because you've been around, like, you know, everybody is an equity trader in a sense, because we're all shareholders in America in a sense, but like, you know, you've been sort of physically on the floors, you've dealt with this market, you intimately understand how they move. Do you think that that's where the technique comes in a little bit? You've seen the price action over so many years.
Well, yeah, I mean, you know, that just comes with staring at the screen for years, right? Yeah.
Exactly.
And knowing kind of how each market trades. I mean, I think each market, each futures market, each product has kind of their own personality, if that makes sense, on how they trade.
Yes, exactly. I think that's something that people totally, like, you know, like when people say to me, I don't differentiate. You can differentiate between equities. Apple is different from MicroStrategy. I mean, there are human beings behind those tickers that create very, very different dynamics. Do you, Jimmy? Do you agree with that? That there's more technique than meets the eye in a lot of trading that people do.
For sure. And I love like talking to other traders and watching other traders trade to see all the different styles and how they do it. And, you know, I know there's going to be some things that my mind won't be able to do, but I take little pieces from other people's techniques, like successful guys that I've met through the years. And I'm like, wow, look at the way he does that. Look at the way, you know, how he approaches the game. Look at how he, you know, just in the morning, how he goes through all the different information. He's got his, you know, like, I learn, I never stop learning, you know, and I'm pretty old. I've been doing this for 30 years, but I'm still always seeking that knowledge. Even like, even from young dudes that are on Twitter now that, you know, have different styles. And, but the, you know, and then I blended all of the different techniques from all the different, you know, guys that I've met over the years and formed my own way. But you know what? That's really a personal journey, I think. Like,
I think it is. And that's really it. Trading is a personal, and technique is really a personal thing. So, you know, Tony, you know, I trade live virtually every day. And what I was going to say is, there are lots of days where I'm not going to do the same thing. Like, you know, here's my strategy. I always go, here's what we're going to do. We're going to do this. And then I don't do it. Or maybe I do something different because, you know, I see something different in the market and sometimes I can't really articulate, I can't quite articulate because that's where the difference comes in. And then the other thing I was going to ask you, because especially you about this is, for example, last couple of days, right? I'm totally managing this whole, Shink Fest with TraderFest. And I'm trading normal, mini contracts live. I made I said, we're only trading micros. And I did that because I did not want to I did not want to trade to go bad and screw me up mentally. Like I really needed to be in a good frame of mind. And I kind of like, do you think that that's a really important part of trading, that there's no fixed rules. They're just guidelines. And you have to be very flexible around those things.
So a couple things. There's a lot to kind of go back and touch on here. So first of all, I think rules are meant for a strategy. I think when you talk about trading rules, I think you build intuition, like what Jimmy and Shai were talking about. And so for me, I don't look at trading rules as much as I look at trading instincts or intuition. The rules are for my strategy. And so my strategy is pretty systematic. I would say it is systematic, but my technique is discretionary because the market environments change. I saw one of the comments saying, what time frame should we use to determine the exact trend? So for me, it all starts with the daily. So if I think that we're in a bullish environment or a bearish environment or a sideways market environment, that will determine how I execute my strategy. So just because I get a short signal, let's go back to NASDAQ or S&P, in a bull environment, am I going to trade it the same every time? The answer is no, because I'm not going to sell a new high in the S&P or the NASDAQ just because I have a mean reversion indication on a 60, 30 minute or 3 minute chart.
Just
so I might trade
bands, right?
I might trade 3 versus I'll trade a 30 lot if it's a mean reversion back into trend because the primary trend is still bullish and I'd rather be long than short. And so there's that hidden bias as well of like kind of what's going on in the market. And so that's why we go back to position sizing. It matters so much because that's where the technique is made. I've always felt that the best executor of the strategy will supersede any strategy. I mean, you look at every single prop desk out there where they will sit next to somebody and they'll teach them the same exact thing. Why do they have different results along the whole line? Why is everybody not the same? Well, it's not the same because guys in different situation handle things differently. So in the moment, they're able to do what they have to do to get the most out of it or to lose the least amount. And so that's why I will always believe technique is better than strategy. And the final thing I want to say is I totally agree with Jimmy and how there's so many, young people out there and guys like Jimmy and myself. Just because we've been doing this a long time doesn't mean that we know everything, doesn't mean that we're right about what we do. I learn a lot from some people that have been trading for just a couple of years and I see their success and I'm like, wow, that's really cool that they're doing that. And I'm very, I'm happy for them. I root for them and I try to learn something from them as well. So I'm very open to that because I know I don't know everything. And I never claim to, and I think that it's important to have an open mind so my technique can get better.
Yeah, I'll give you one better. When I teach my strategy to people, most of the people in my room trade the strategy better than I do. So, there you go. They have better technique, they have better patience, they have better understanding and nuances of the market. So there you go. It's the same. It's my ideas, but they're doing them better, which is great to see. I love to see that. Another quick question here before we kind of get into some of the other stuff I want to talk to you because we're running out of time. there's always a battle. There's always a religious battle in the markets, fundamentals versus technicals, right? And news versus charts. And Tracy is, a master, I think, of both, of combining both. I'll throw it to you first. When you are examining a trade, what do you weigh more, the price action or the news flow?
Well, price action, I think it's more
Wow.
important than anything.
Wow.
But
You
that said,
surprised me with that. Okay.
but because, news could come and, with oil, for example, because it happens all the time, you'll get a headline of some rumor of OPEC and then, the bottom drops out. But if it's mostly a bullish trend, then, that's probably going to get bought back up. And
Right.
I pretty much know a BS headline when I see one at this point. But, how I approach, a trade in general is I need to have a fundamental basis for that first. So I need the fundamentals behind it. I need, before I even get into a trade, because to me, that's just very important. And, I'm very macro focused. So, I need a story for the trade.
Right.
And so I need a solid fundamental reason for me to get into a particular market. And then it's about, the price action versus news headline, kind of where you really have to, be more aware of, because, again, there's a lot of headlines that go on.
You have to have some kind of a fundamental orientation. You have to have a fundamental.
Yes. For me to get into a trade, whether, if it's, I want to get long,
Right.
platinum, for instance. All right, well, what are the fundamentals behind it, and why should it be a long trade? So that's how I approach the trade to begin with, is from the fundamental side.
Now, let me ask you, because this is a very hard thing to do. In the middle of your thesis, you start to see lots of data that contradicts your thesis, or some data that contradicts your thesis. How much does it take to shake your faith in a trade? Are you okay at changing your mind? Does price action itself sometimes make you shake your faith? Like what?
Yeah, I mean, you still have to be nimble in markets. I mean, anything could happen. You never know. I mean, there could be attacks in the Red Sea suddenly that you don't know about. I mean, so you always have to be flexible, right? And even if you have a fundamental reason and you are dead set against this trade, if the price action is telling you that this is just wrong, then you're just wrong. The market's telling you you're wrong, no matter what.
Sometimes there's no reason, but the price is going against you, and by the time you figure out the reason, it's too late if you haven't taken proactive measures to control it.
Right.
Sometimes it's nothing visible. Yeah. What about you guys, Jimmy and Anthony? Like, do you pivot off news? Do you trade news? Do you use that to help you on your levels? How do you guys generally react? How do you just generally deal with the day-to-day news flow in the markets?
It's a balancing act for me. Sometimes it's always, I would love for the fundamentals. I'd love to get a strong fundamental background behind my thesis, and then have the charts confirm and then trade off the technicals, in a perfect world. But I've often seen, price action lead news, and I've often seen like price action be agnostic to news. A great example was, trying to be short COVID when COVID was first starting to break out in January of that year. The market kept rallying, even as the layers of COVID was exposing itself.
I remember like in February, market kept rallying before it actually broke like a dam. I remember I was like, what the hell are they doing? People falling like flies. Yeah, I remember that. That's crazy.
Right. So people say like price is perfect, but it's not always.
Right.
So it's a balancing act. I keep an eye on both of them. Andy and I often we'll have deep debates over the fundamentals. This is what he's seeing, and I'm not seeing it on the charts yet. And we just had a trade this week where he really wanted to sell stocks, S&Ps and NASDAQ because of what he was seeing in the back end of the yield curve, heavy bonds, heavy 10-year. They kept making lower lows. His thesis is that the Fed is, starting or could possibly lose control of the back end if they don't, pivot soon. But the charts didn't say, like I was like, well, we can do it. But the charts are not, this looks like a consolidation right now. There's nothing about this price action that's telling me it's going to fall out of bed. Right. Possibly we weren't holding our opening ranges, little nuances like that were happening within the consolidation. Right. But you know what? He was absolutely right. And his thesis, the price action was actually lagging, but then we saw everything to come to fruition on Friday. So that's what I mean. Like it's a real balancing act. I don't think it's one over the other all the time.
Yeah, no, it's an interesting point. Tony, you're famous for saying that it's not the news, it's how the market reacts to the news that really matters. Can you talk a little bit about that?
You took the words right out of my mouth. The reaction.
I know what you're going to say before you say it.
I mean, going back to what Jimmy said, the whole time I'm watching, the 30-year just get clipped all week long, and I'm watching the NASDAQ just rally 500 points like it's nothing. I'm thinking to myself, oh my God, I want to sell this thing so bad. And then eventually it happens, right? And so timing's everything as well. So, I think it always depends on what the news is and what market you're trading. I mean, news will supersede the charts if it's something that's shocking to the system, if it's something that's news, right? If it's data that's either baked in or anticipated, or you've got a lot of positioning coming into it that will totally skew what the news does. It's a totally different situation, right? I always look at it as like new news will always supersede charts because it's a rebalancing immediately. And so if you're a news trader, that's the times you look at where something is just like not really baked in. And that's when it matters more.
Yeah. Yeah. We're going to have Jason on who's going to talk about positioning. But I remember a quote from one of the most profitable traders for Citibank prop desks who said, it's not enough to be right on an idea. Everybody else has to be wrong for the idea to really work. In other words, you could call in, like, this is the point of what Jimmy's making. Like Andy, who's his partner, was right on the idea, and everybody was actually wrong in their price action. And now, like, that trade is really, really working, which is kind of interesting. It's an interesting dynamic of how things work. So I'm going to skip this question because it's a great question, but we just don't have enough time. I wanted to just spend a little time with you guys on crazy pit stories because I know there've been more than a few. Jimmy, of course, is the master raconteur, but just give me a couple of insane stories from the pits that still stay fresh in your mind, either as PTSD or just simply laugh out loud funny.
I was thinking the other day about the fighting, and there was fist fights, and there was rules about the fist fights too. Like if you just went after each other, you were probably looking at like a $10,000 fine. But if you actually exchanged blows and punched each other in the face, it would go up, measurably. But there was also like thousands of cameras on the floor, and they were there for like trade disputes. And there was a room in the back where you would go and like with a broker or something and go and ask for angles of a previous moment, and you could see like what had happened and work out a trade. But after a big fight, there would probably be 100 guys in that little room watching the replay of the fight. And then usually the two guys that fought too were like right in the front watching the fight, and the commentary from everybody, like it was just an amazing scene. It was surreal.
I have a story specifically just for that.
Yeah.
So in I would say probably a year after the cameras came to the floor, you used to have going back to what Jimmy said, you had to have a trade dispute in order to go to the cameras, right? And they made that a rule because people were going there watching stuff, and who knows what they were looking for on the cameras, right? And so you couldn't just go in there without an actual trade dispute. And so I remember one time I'm in the S&P and the NASDAQ was above us. And so a lot of times you'd hear something going on in the NASDAQ and you'd look up and you'd be like, okay, like what's happening in there? And, it'd either be a big order or an argument, whatever. But if it got loud there, we would pay attention to it because we would want to know what was going on. Is it an order that's going to spill over to us, or is it just, something that's going on? And one time there was a big roar. And I remember I was just walking outside of the pit, and then you look to the NASDAQ and you had to walk up the steps, and I could just see like everyone kind of like swarming. And I'm like, dude, like what is going on up there, right? And by the time I started walking up there, I couldn't even get up there to see it because there were so many crowds of people.
Wow.
And there was a girl by the name of Elena who sadly recently passed. She was younger than me. And she was beautiful. She was just a fierce, just totally like, she was just a pit girl, right? If you said something to her, she'd tell you to go fuck yourself. You know what I mean? And she was just awesome. I loved her. And somebody called her a bad word, right? A word you don't call a woman.
Right.
So supposedly the story was, and I saw it, I saw the tape. She said, "What'd you say?" And he said like this to her again. And this guy's probably 6'2", and she grabbed him and just popped him 2-3 times. And you just see him standing there. And the thing is, she's hammering him right in the face.
Like a maple tree falling over.
Immediately, once we knew that was the story, everyone all of a sudden had a trade dispute, and they had to shut it down that day. Fortunately, I was one of the first people in there to be able to see it. But those types of things happen. The rules kind of changed a little bit after that. They weren't letting us in there too easily. Like you only could have 2 people in there at a time. Remember how that was, Jimmy? How eventually they just wouldn't even wouldn't let us in there.
That girl was scary too. I traded next to her in the NASDAQ pit, and I mean, I would have rather fought the guys in that pit than fought that girl. She was fucking crazy.
Her father was a cop.
Beautiful too, which was the more disturbing part was that she'd run you and embarrass you.
Super high heels.
Yeah. Holy shit.
Yeah. It's hard to believe that she's gone. I mean, we've lost so many people over the years from the pit. It's crazy. She died this year.
I've seen it was just the worst human behavior, because it's like, you're in this like pit where brokers it's like throwing, steaks to starving dogs and like they're going to fight each other over those steaks every day. And, just seeing like I saw a guy rip a guy's toupee off his head. And
was it Wayne? Was it Wayne? Was it Wayne?
No.
They pulled it off?
There was like a $50,000 bounty.
You remember how much money that kept going up?
He actually had to hire a clerk to stand next to him to protect his toupee because of the bounty got so high.
He was the biggest Euro-dollar options broker. And I remember when a piece of gum was thrown into his wig.
I mean, and his wigs were like $25,000 a pop.
It was
50
big
of the wigs.
Wig, man.
A giant afro.
I'm going to stop these guys because I know, they could go forever and it's just so much fun. And Trace, I'm sorry. I know you probably have, unless you have like something really interesting. I want to save your time for actual market calls because I'd love to know what you're doing. But, you were saying a lot of the worst things about the market, but also, Tony just posted something I thought was really good, which is that, there was also big camaraderie on the floor. And by the way, Tony's Twitter feed, Tracy's Twitter feed, Jimmy's Twitter feed are absolute must. You should just put them on there all the time and just follow them. They post amazingly great stuff, all of them, in all sorts of different ways. I thought it was kind of, just interesting in terms of all this stuff. But I want to save the last couple of minutes just for the markets, and I'm going to give Tracy the floor because she's been sort of patient waiting for the guys. Did you ever get abused when you were on the floor, or you were that kind?
Yeah, I was just a trade desk manager, so I wasn't an actual trader. So I kind of was away from the fray at my desk. So
and you were away from the beasts, away from all the beasts, all the Michigas. Great. So let me point it to you because you're obviously an energy specialist, metal specialist. In the prior panel, one of the guys I had on, Austin, had a call on oil to the downside. He thought it was going 60. I'm actually curious, sort of like your view on that. What do you think? Where's 2025 for oil first and foremost?
So, I think ultimately we're going to be range bound for another year again, which is not a bad thing at all.
Right.
There's still plenty of trading opportunities. I do think that I think this level that we're currently at, this $67, let's call it $66.95, is probably not going to hold. I think you'll probably see a swift move to the downside. That said, realistically speaking, if we're talking about shale break evens, they're at $65. So anything below, I know I've seen these wild calls because Trump's going to be in office, drill baby drill, but I don't.
It just takes time,
that's necessarily going to be happening. So
it's not a water faucet. You can't turn it on, right? I mean, even if you said drill baby drill, it's not a water faucet. It's just a lot of
exactly. And so these oil companies still, are focused on shareholder returns. They're not going to make the same mistakes that they did before, the prior two crashes. So, I don't think they're going to make that happen. I don't think we're going to see OPEC necessarily turn on the taps either. So again, I think this level that we're at right now probably won't hold. I'd like, maybe a swift move down to 63. When you start getting below that $65 mark for any length of time, you're going to start seeing production come off the market because they're not making money at 65 a break even. So, low prices are the cure for low prices, right? So I just don't think that it'll hold. But if we're talking about like a near term technical trade, I do feel like, we could easily see that $63 area.
On the geeky side, because I know I have you and I can't let you go. The Exxon field in Guyana, which is just this apparently massive upon massive find. What does that mean short term, long term for the market? I mean, is it like, is it the next nirvana for all of us? Because it's not, it's not the Middle East. It's very, very safe area, and it seems to be a really serious supply. What's the story there?
Yeah, man, I think it's really good. Yeah, there's a series, what is good about offshore, and I do like offshore because we have right off the west coast of Africa, we have some interesting things happening, as well as off of the east coast of South America.
Yeah, South America, right? Yeah.
So what is good about these offshore projects? Let me say, what's bad about these offshore projects is they take a very long time to fully come online, 10 years, right. That project. But when it does, and that's all your upfront costs for those wells, because once you start drilling, your costs go down significantly, like half the price of what shale is. And so, there's good and bad with
super interesting
markets.
Yeah. So when it does come to its full fruition, it could be an incredibly massive source of energy for us, which would be great.
Yeah, it would be great, and at a much lower cost than, say, shale would be.
Right. Interesting. All right, I'll let you go without. I can't let you go without talking a little bit about gold. What's your view here into 2025? I know you told me privately that you're a buy to dip trade, but just sort of levels. Where do you think you'd be a buyer, and where do you think it has a chance to go to in 2025?
Well, I'm a long-term gold bull. I personally welcome this pullback dramatically. I do not like parabolic markets. They scare me because then you have these mean reversions, right? And so personally, I'd rather see the market go up a couple $100, come back 100, go up a couple, I think it's a much healthier market action, but, I think we could see over 3,000 in 2025. But again, I do welcome this pullback. The reason being that I don't think you're going to see central banks stop buying at any time, because there's still that risk that, what happened to Russia might happen to them, as far as, the Federal Reserve confiscating their money. And that's really when we saw central banks saying, well, we may be friends with them now, but what if we piss them off? They may confiscate our money. So I think you're still going to see a lot of central banks buying. You have an interesting thing, right now in Zimbabwe that's happening, where they have a gold-backed currency right now. We may see other countries try to have a gold-backed currency as well, depending on how this kind of experiment works out for them. So we'll see. I think we're not seeing, it's not like we're seeing CapEx blow out, right? I mean, none of these mining companies they're doing exactly what oil and gas is doing. They're just a little bit behind where, you're going to start seeing a lot of mergers and acquisitions. They're going to be buying production instead of actually expanding new production. And so I think that sets us up for a very bullish scenario, fundamentally speaking, into 2025.
Cool. And gents, real quickly, because we're running out of time, but I'd love to just know just a quick thought on equities, bonds, Jimmy, 2025. Are we gonna? Is it first 6 months of honeymoon and then we're gonna just dive? What's your vibe on the whole thing?
I think I want to buy this dip here for an end of the year run. I don't think this is really going to fall apart too much. But I'm watching the back of the curve. That's at some pretty hairy levels, kind of standing on a cliff. And we haven't gotten any bounce in the back of the curve, the 10s, 30s. So I am worried if I see that like really come unraveled from here, then I'll back off the dip buys and equities.
What's unraveled in your view? 5? Like at what level are you going to go? Oh, this is going to. I think
if we start selling off from here and start heading back towards our old lows, I think it will get intense really quickly from this point. I don't think we're that far away from all of a sudden, having an issue.
Okay, cool. And Tony, what about you? How are you feeling about 2025? I know you still continue to be buying the dip because the trend is still up. But like, what's your any clouds on the horizon for you, or are you still staying strong and long?
Well, I bought calls in NASDAQ a week out on the close on Friday, just because I'm with Jimmy. I think this every sell off right now, I'll continue to buy dips. I mean, I'm not going to go home long futures into the weekend because I'm not insane. So, I do think that into the end of the year, it's hard for me to see a reason. I go back to news. Is there going to be news? I think majority of the news is behind us. And so you always have the overreaction, then the reaction to that. And then now I think we're kind of stabilizing. I think if there's a sell-off, it probably comes in January and goes back to what Jimmy said. I agree 100% that we were talking about how Andy was saying, look at the back end of the curve and what's happening there. I mean, even the 2 years up at what is it at 4? What is the 2 year, Jimmy?
413, 425.
Okay, so how is the Russell going to be that trade that's going to continue to go up if the borrowing on the short end of the curve is as high as it still is? I mean, you just don't have a market that tells me it's just going to keep ripping higher. But I also don't see a reason to sell into the end of the year. And I think because this year's been so strong years just don't end flat or just come all the way back. So I like bullish into the end of the year, and I think January could be interesting, especially if bonds stay where they are.
I can't let you guys leave without you sharing your great trick, which is you have this really cool way of like opening up the way the price action opens at the beginning of the year can sometimes determine actually direction, at least sometimes for the full year, but definitely for the first quarter. So can you just share with our audience how like if it makes the high and it just doesn't, that high doesn't get broken, that's usually high stays around for a while. Could you expound on that a little bit?
I don't have necessarily a complete system that I would go and explain the way I look at it. But I mean, just from doing it, the three of us have been doing this a long time, the four of us, right? And just from watching that how often do you see years that were really strong just give back a huge part of the year in the last month? I mean, I can honestly say in my career, if I look back, my memory does not really trigger any times where that happened, right? I mean, there maybe has been a couple. I remember there was that one year, I don't even remember which one. It's all kind of a blur. That wasn't 1 week of like the week of December where we had that huge sell-off, but didn't it kind of come right back before the end, for the new year? Maybe they could shed light on it, but it's like, yeah, that could happen, but it'd be a dip I'd buy.
That's the risk. I love the dip buy here on the Trump victory. Growth, all the prospects, but that year that Tony's talking about, that was the year that Powell was a little like he delivered a hawkish hike in December with low liquidity. No one was minding the store, and the market really became unraveled that year in late December. And we're in a similar situation. We have a Fed meeting, we have hot data coming in, and we could see volatility. That's the only thing standing in the way of this equity market is if the Fed has to pivot in December of all months, and you see what
we could have a whole show on that one, Jim.
I'll leave you guys with a last word because that's fascinating. I want to thank you so much, guys. I could do this for 4 hours with you guys. Fascinating. Thank you very much, Tracy, Chai Girl. Thank you, Anthony, who's got to do a million different things today that he was telling me. And Jimmy is just going to chill, go to the beach, and probably have the best day of all of us. Thank you, guys. I wish you all the best. Everybody, please follow them. They're amazing, great sources of information and trading. And I want to thank you so much again. Hi. All right, guys. So we are coming up now to our final session. And let me just make sure that everybody is in the room here. I see Thomas here. I see Jason's here. Wonderful. Give me just 1 second, guys. I just want to set up the question slides for our next session, because we're going to go straight into our Battle of the Market Wizards. Really, really, hopefully cool session. And this is the one session that I absolutely want as many questions as possible, because these guys are here for you. They're here to answer questions. And please post any interesting questions you have. They'll be very, very happy to answer them. I'm going to just go to my screen right now. Hold on. We'll go to my screen. Present. Hi, Tom. How are you?
Hey, good.
Jane. Hi, Jason. Give me just 1 sec.
Hi, Jason.
Okay, awesome. See, I got you as the Battle of the Market Wizards. Even though I know you're not really battling, you're running two very, very different approaches.
We're drinking our coffee.
You're drinking our coffee. Exactly. Tom is a real trooper. He's also coming to us from Arizona. It's super early for him, and he's known as Mr. Serenity because he's obviously figured out a way to trade the market without having any emotional ups and downs. Jason and I are on the end, I think, a little bit more emotional human beings, right? Jason is the first one to admit that it's never as easy as it looks. But gentlemen, welcome. Thank you so much for joining us. Of course, let me just sort of give you a little bit of an introduction of both gentlemen, which is that Jason is a contrarian's contrarian. Basically, Jason's approach to the market is to trade positioning. Jason believes very, very strongly that the key to making money in the market is sort of like that quote I told you a little bit in the other panel from a Citibank trader whose name I forget, who said, it's not enough to be correct on your investment thesis. Everybody else has to be wrong. And I think that probably encapsulates a lot of Jason's methodology. He looks for ideas where as many people as possible can be wrong, which creates, obviously, the reverse opportunity in the markets. Whereas Tom has a completely different approach, which is to go with the flow. And both of these gentlemen have been in the game for many, many years, for decades. So it's not like one works and the other one doesn't. They both work if you apply them specifically, and that's going to be the key that we're going to be talking about. But Tom has a very, very different approach, which is that I'm going to spread my bets across 50. Last time I talked to him was probably about 50 different algorithmic systems, and most of them are going to be trend based. Some of them will be mean reversion, but I'm going to mix and match, And the idea here is to create a very, very robust portfolio, not necessarily a single trade idea, not necessarily a single investment thesis idea, but that when all these pieces come together, they're actually going to provide a very attractive return for me, which is kind of an interesting approach. And Tom, by the way, was, we were talking earlier, was sort of the first manager to mix commodities and stocks together. And he was telling me earlier that at the time that this was unheard of, and people didn't even want to give him money because it's two different markets, two different margins, two different rule sets, which is sounds ridiculous now when we're all sitting here trading every single item either in an ETF format or a CFD format or a futures format. But it just goes to show you how basically times change, and if you're sort of ahead of the times, sometimes it helps, and I guess sometimes you're just ahead of the times, right? And you have to wait up for the market to catch up with you.
A lot of wasted effort for no gain whatsoever. One of the reasons I retired at the time.
Exactly.
It didn't seem like anybody could understand simple math and statistics. And so finally I said, well, I don't need this anymore. I'll just go manage my own portfolio and to heck with the clients. And my life's gotten a lot easier.
Exactly. By the way, I'm sorry, I don't think you guys have actually met. So Jason, this is Tom. Tom, this is Jason. Just want to introduce you guys.
Hi, Jason.
Great to meet you, Tom.
Yeah.
Hi.
I have to say that I've been called a lot of things. Mr. Serenity has never been one.
Yeah, I know Jason a little bit, and I know definitely Mr. Serenity is not his middle name. Neither is it mine, by the way. So I kind of wanted to ask first a conversation away from the markets. Just sort of, it's a softball question, and I know both of you guys are going to say, but I'm just curious. You've had a lot of attention thrown your way because you both were featured in Market Wizard books. Market Wizard books, for those of you who are not, only new traders don't know what Market Wizard books are. Those are the most popular books on trading. There are a bunch of interviews with a whole bunch of traders. We've had, of course, the great Linda Raschke here with us a couple of times. The point being is that there are, very few people in the world that were featured in these books because they had really interesting, unique stories. They had really interesting, unique performances. And I'm just wondering, has this had any impact on you? Knowing both your personalities, I know you're going to say no, but I'm just curious, Tom, what has been, since you were featured in the book, has this changed anything in your life? What happens now that you're a Market Wizard?
It probably back in the late 90s, right about the time at 95, I moved the company Trendstat down to Scottsdale, Arizona from St. Louis. Mm-hmm. Right about then was when New Market Wizards came out, and I was probably a larger known name at that point. Before that, it was a bit more, the business was coming in. We were, growing. I obviously did well enough to, pull off an entire move of a company. That was $250,000 expenditure right there. So we were doing all right, but I think it sort of sped things up when it came out. Nice. And that was
welcome, right? Welcome news, I guess.
Yeah, it was okay. And we kept up with it. I would say it probably made my life a little bit busier, a little more travel, a little more visitors to the office and all that. And then it kind of, at that point, I think as we came into the 2000s, I really started analyzing the business, the software we were running, my own life. And I said, I don't need this anymore. So in 2003, I closed it all down. I've been managing my own money since. Right. And it's so much easier. Oh my gosh. Right. The amount of complexity of dealing with hundreds of clients in lots and lots of different countries across lots of trading desks. We had 40 computers for 10 people. We had data coming in, data going out. It was information processing juggernaut. And
now, you were trading 24 hours a day. You were trading Asia. You were trading like the Singapore exchange topics, like everything, right?
We were trading a lot of things. Yeah. There was, you got to have backups for everything. You got to have backups in people, backups in equipment, backups in power, backups, ways of getting to the internet.
Yeah.
It's an information processing business. And for me, that's the way I ran it. I'm sure you guys that are more traditional traders have a different approach to everything. But for me to keep operating and to deal with the liability that you have as a money manager, you got to have backups and you got to have everything running. And so there was that constant, I could tell what I would be doing every day by the clock. Because it's sort of the same thing. Information comes in here, it goes out there, and the time of day is the same. And the people
I can see how they could turn into a real grind. Absolutely. Now, Jason, on the other hand, you have kind of dove into a little bit of your wizard fame because you decided you're going to open up a newsletter. You run a very, very good newsletter called Crowded Market Report. But that is a two-edged sword, man. I see the abuse on Twitter, and I'm just wondering, do you just like, hey, I shake it off, or does it annoy? Because we're all wrong all the time. I mean, that's not even a question. But every troll on Twitter loves to rub your nose into if you just if you're off by a millimeter on a position. I'm just wondering, how do you deal with that as a dynamic of our life these days?
Oh, that doesn't bother me one bit.
No,
we do what we do. I mean, without sounding like too much of a jerk, the people who have followed the advice of our newsletter have made a lot of money. I never once claim. In fact, I do the opposite of claiming that I am right all the time.
Yeah,
I'm happy to admit that I am right less than half the time,
right?
And that's actually part of what I am trying to show people.
Right.
In the newsletter and trying to educate people about what trading really is. That is not what it's about, right? Trading is about making a bunch of money when you are right and losing a little bit of money when you are wrong.
Right.
That's what this game is, no matter what anybody wants to tell you. And anybody, you can see Tom nodding his head, anybody who's actually had real success over time in doing this will tell you exactly that.
Jason, I think my stats would be about 33% of the time right. Exactly. Over my lifetime. That's 5 decades.
Exactly. And mine are, over the 20.
I think it was 36, Tom. Last time you were on the show, you said to me, you were like 30, according to your data, you were like 36% accurate, but when you hit him, it was like a 4.5.
Yeah. Well, it depends on the strategy and the markets and lots of, but
Is that correct, Jason? Sorry, I didn't mean to talk over you.
That's where I am. I mean, that's right where I am over now almost 24 years of running this process that I run. We're at 38% winners. And the average is about 4.5 to 1, the winners to losers. And that's what trading is. People want to make it into something else. It's not about predicting the future. Okay. Nostradamus is a myth. Nobody predicts the future. I love listening to interviews by Druckenmiller, who's arguably the greatest money manager of our time. Right. He says it all the time. He's wrong all the time. Okay. Well, it doesn't matter. So when people on Twitter want to troll me, I love it. I laugh. I'm like, okay, so you don't understand anything about trading. So that's great. I don't even say that. I just laugh. I usually say thank you to them is what I say.
I think the funny thing about Stanley Druckenmiller that everybody trolls him on is like if you followed him for a long time, you kind of understand this. Stanley Druckenmiller will have a very, very confident view, weekly held, meaning by that weekly, WEA weekly held, meaning that he'll be like, oh, I'm like 100% long bonds. And then you talk to him like a week later, oh, I shorted bonds like it was no yesterday. And people don't understand that, he will change his mind on a dime, which is why he's so good. But people go, oh, look at him. He was long bonds. He was completely wrong. But that's not how it works. You have to have a very flexible mind. But
I have a client who had money with Stanley Druckenmiller when he managed money for other people. And he told me that Stanley would write these monthly reports. And Stanley's a very smart guy and a very articulate guy. And he said the monthly reports would just be the most beautifully written things that you'd ever seen. And the arguments that he was making just seemed so right and so logical. And they would be totally wrong. And then the guy would get his account statement and he made money again that month.
Right.
So
no, that's true.
Be wrong, make money. That's the best thing, right? Exactly. And I think that that's the biggest personality flaw that most people, one of the reasons most people fail at this is because they don't want to be wrong. You know,
one of my favorite, I don't know, sayings that even my wife quotes me now. Sometimes when we're watching Varney in the morning or something like that, and watching how the market's open, and Stuart will say something about, what do you think the market's going to do by year end or something like that. And my wife will say, the market will do what the market will do. and I keep saying that over and over again. I mean, like it was stocks Friday. I'm looking at all the red on the indexes. So people are asking me, well, is it going to crash by the end of the year or whatever? Or are we going to just buy the dip opportunity? The market will do what the market will do. I'm ready to go either way. Right now, I'm probably net short, I guess, 5 out of the 6 indexes that I trade. Monday, I might end up long.
Right. Yeah, I was going to say that's so interesting because I remember you posting like a week ago, and Tom, by the way, posts a lot of his positionality all the time on his Twitter. Really, really great Twitter handle at Basso_Tom. Go ahead, follow him. So, and Jason, of course, posts an amazing. Jason is like really my go-to guy, period, on Twitter as far as where you want to know where things are. But Tom, it's funny you were talking about that. I used to work for a Bear Stearns broker when I was like in college, and he used to always go, Mr. Jones, the market is going to go up or down unless it stays the same. And that was a classic refrain. From him. It's sort of like
my friends used to call me up. They don't anymore. But my friends would go, but hey man, what's the stock market going to do? I'm like, I have no freaking idea. Yeah. And they'd be like, what do you mean you have no idea? You're a hedge fund manager. I'm like, right. I'm a hedge fund manager because I have no idea. Okay? Right. It's very hard to understand that concept, but that's fact.
Exactly. Yeah. Speaking of that, by the way, there's a question here from Charlie. I thought it was kind of good. He's asking, can you please tell us the risk management system used by hedge funders and large traders? Maybe you guys could talk a little bit about the kind of risk management systems you yourselves have implemented over time, maybe how they've been refined. I'll let Tom start because he's got a lot of.
Yeah. All right. Well, let's see. Risk management systems. The first thing I would always try to put in place is some point at which you say this trade's done, so stop loss of some sort.
Right.
So that sets the amount of dollar loss that you'll end up suffering roughly. And that's a critical thing to start with. The other thing that I find is very effective in my own case is to position size based on the amount of risk that you're taking and the volatility that is currently in the market. So in other words, if you've got a market that's twice as volatile, to make the math simple, I would size it at half the size that I normally would if the markets were just quiet. And so what psychologically that does for you is when a market's quiet, you start building bigger and bigger positions, and then they break out and everybody knows about the move now. It's Coco going to the sky, right, like an F-35 taking off, straight up in the air. Right. And you're in on it with a bigger position. And then as the market becomes more volatile, as everybody finds out about it, I back the position off to keep that portfolio balanced perfectly.
Can I just interrupt you here for a second to really refine this point so people can understand it a little bit? Because I'm trying to understand the volatility process here. Do you mean, let's say volatility goes twice as large, and we'll use Coco as an example. If volatility is low, you're risking 1%. If it gets twice as large, you're going to risk maybe 0.5%, or do you risk the same 1% and make larger stops? Like in other words, if your stop is 100, now the stop's going to be 200. In other words, do you risk the same size of a dollar and widen your stops, or you actually do smaller dollar sizes?
I do two. I start with the price action, and I set my stops according to the price action. And if the market's volatile, those stops are going to end up being a little farther away. Okay. So as a one contract, if you're looking at one share or one contract, depending on whether you're trading stocks or futures or whatever, even FX, we would base it on 1 million FX. Whatever it is, that's the dollar per unit. So then the question is how many units can I buy?
I see.
And I do it sequentially that way, not the other way around. I don't set my stops based on what my risk needs to be, because the market's not going to respect that at all. I may be putting my stop right in the middle of the noise, and I'll be taken out tomorrow. So I first set the stop. And then in a case like Cocoa, good example, it's going so fast, my poor stops can't keep up. I mean, no matter what math I use, there's no way anything that I could dream up, unless you do even a parabolic stop. The math there is still not going to be able to keep up with what I saw out of Cocoa this last week. So what you do is your risk per contract or per unit is getting higher and higher and higher, because you can't get the stop to keep up. Well, then I ask myself, all right, how much of my equity is now at risk in Cocoa? And I just simply set a limit. I say, okay, I don't want more than 1% risk in any market, Cocoa or anything. So I'm at 1.1. I need to peel off one contract or two contracts or whatever the number is to get back down to my allowable level. And that way I'm Mr. Serenity. I've got lots of different positions, all with their max limit on equity. You know, it's kind of like, I like to think of it as like I'm one of those guys. If you ever see some movies about casinos, that they have that central control booth up there with one-way windows looking out over all these slot machines and poker tables, and you know, this lady over here just hit the jackpot, and you're paying out her, but you're bringing in money from all these other people, and when you add it all up, the casino makes money every day, and that's kind of a little bit more of the mentality that I like to have. I don't mind having a lot of different positions across a lot of different strategies, and I'm just looking to try to make the daily total go green, and so it's a numbers crunching task. Got
it. Well, Jason, what about you in terms of your methodology on risk? Is it just straight up? Do you vary it with volatility? How do you approach risk on a management basis?
So I think, to Tom's point, it's going to depend on what your trading strategy is. But here's my trading strategy. This is why I got in. Okay. This is where that trade is wrong. It's not about some money management stop. Like, you could sit here and trade S&Ps and be, oh, well, I only have a 0.5 point stop on my trade, so I could trade 5,000 S&Ps. Yeah, but you're going to get stopped all day, right? 0.5 point, right? So it's not about that, right? It's about, this is where my trade is wrong. So therefore, this is where I'm going to stop. Okay, so we know that now. We know where we're getting in. We know where our stop is because the trade is wrong at that point, right?
Okay.
And then, you back into how much you're willing to risk on a trade, which for me is the same on every trade. I risk 70 basis points per trade, just because I have found through back testing and now through 20 whatever years of live testing, that gets me to the portfolio volatility of about 7 to 8, which is where I want to be. Okay. Based on my trading style, 70 basis point risk per trade gets me to that volatility. So that's what I risk. So I know I'm risking 70 basis points of my assets on this trade. I know where I'm entering. I know where I'm getting stopped. How much do I have to put on? So if I'm wrong, I lose 70 basis points of my that's it. And I think that's an important point. The point of where you're going to get stopped, which Tom brought up, is so important, right? And again, it's going to depend on what you're doing. If he's trend following, then he's probably running the trailing stop. Because I'm turn picking, I'm not doing that, but that doesn't really matter, right? The whole point is, where is the trade wrong?
Exactly.
That's where I'm getting stopped. That's it. And therefore, I'll size to that. And now he's going to have to dynamically adjust his sizing because he's trend following, so that, like he says, the volatility is expanding, right? And he only wants to risk this, so he's going to dynamically adjust his sizing, as he talked about. My stuff won't do that because of what I do, but again, it doesn't matter, you know.
But on the other hand, when volatility is contracting, he's also going to be adding size, which is, will work. If it goes his way, it's going to work for him. He's much more fluid and dynamic, which brings me to.
And I also have like you said, 70 basis points. I do 50 basis points for a new position, and then a 1% of equity for an existing position, which by definition would have been a very big profit runner already.
Right.
And because I picked up another 0.5% of risk, probably that market's been really going my way. I cap it at 1%, but I started it at 0.5%. So yeah, I'm even more conservative than you when I put that position.
That's super important. And this is something that, quite frankly, I still struggle with, because it's like to say, I started my risk at this, but mark to market every day. If God forbid the trade's actually working, well, now I'm in the money, and so now my risk mark to market is more. So what am I supposed to do? This is something I struggle with all the time. And of course, you struggle with it every time you have a winning trade that then turns around into a loser. Now you're like, oh, I should have been taking some off the table, during it. I go through that still.
This is such an important point, and like I really want to zero in on this because many people don't understand it. If you guys could explain it a little bit more, what you're sort of saying is, you started at like 70 basis point risk. Then the trade is maybe 2 times, at 2x profit. Now it's like 140 basis points in the good, in your favor. And actually, now your risk is actually 140 plus 70. It's actually like a bigger risk to the stop out than when you started. And you're like, oh my God, what should I be doing now? And this is where it gets so hard because you either have to commit all the way to the terminal exit point, or you start screwing around with it. And then obviously your long-term averages really start to get messed up because of that. Your statistics get messed up. Is that I'm interpreting?
Well, Boris, I would give you this advice there, mathematically speaking, because I've done these studies. If your goal is to make as much money as possible, so return is your goal, you probably want to hold on for dear life and let that position run like crazy. Jerry Parker and others would argue statistically and correctly, I believe mathematically, that you just hold on for dear life, and you have to have a stomach for it. And a lot of traders do not have that stomach. If you want to maximize,
and that's what Jason does. That's why he's never Mr. Serenity, because it's really hard.
Well, and what my objective is a high return to risk. So I'm a retired guy. I'm managing my own money. I like playing golf and, pruning my bushes in the yard and everything. I like to get away from the computer. So return to risk is what I'm trying to maximize. And if you're trying to maximize return to risk, you have to think through the math of that. Okay, so you got the return in the numerator and you got the risk down here in the denominator. And, the denominator has a big mathematical effect. So those drawdowns start the day of your equity high. The day of. That's the way. I was a money manager, and these allocators would nail you with that top day of the equity run. So my attitude is keep your risk managed by peeling off positions if you have to maintain a very, very balanced, very, very controlled risk environment in your portfolio. And, when I wrote the book, Successful Traders Size Their Positions, the math that I've used for 45 years is right in the book. So, Jason, you don't need to struggle anymore with whether or not to peel a position up. All you got to do is set up a spreadsheet, and it'll put the math in there, and it'll tell you where you should be to maintain a balance, if that's what your goal is.
I appreciate that. I think the comment is so important, and I talk about this quite a bit. It depends what your goal is.
Exactly.
Like you said, right? And I always say, you say that to someone. It reminds me when I started playing guitar, right, a few years ago, and the teacher would be like, "Well, what's your goal?" I'm like, "What do you mean? What's my goal? I want to be Jimi Hendrix." I didn't even understand the question, right? Did you ask somebody that starts trading, "What's your goal?" What do you mean? What's my goal? I want to make a ton of money, right? That's my goal, and that's the answer you're going to come up with. Just like my answer was, I want to play like Jimi Hendrix. As I've played guitar for a few years now, I get the question. It depends what your goal is to determine how you're going to handle this stuff. If your goal is serenity, then you're going to want to put less risk on. With my thing, I have another issue there, in that I am also trying to maximize return to risk but because of the way my business is, okay, I have a business clearly because people love to deal with handsome people. But other than that, okay, I have a bit. If I were a trend follower, I wouldn't manage any money. I work alone. I work out of my house. None of these allocators are giving me money as a trend follower. I have a business because I'm a counter trend trader. I'm a turn picker. So the return stream ends up being negatively correlated to other return streams, right? That's my business, right? Now I have to make money and I want my risk. So I'm maximizing for return to risk with the added thing of I need to have zero to negative correlation to these other things as well. So I have to take that into account as well. That's my business, right? Yeah, that whole issue of open trade, and the key to it is I've been able to back test to find where the best place is, what the best thing to do is, and B, now I've got over 2 decades of actual testing, right? That I go through at the end of every 6 months and look and monitor and make sure that, so that's what gives you the confidence to do whatever it is you're trying to do. Hopefully it doesn't guarantee, as they say, the past doesn't guarantee the future, but it's something, right? So those are the key things rather than guessing, testing, checking, keeping these statistics on your own trading, keeping a journal. Hey, on this one, I got out of half. On this one, I didn't get out of half, and 2 trades aren't going to matter. But over time, as you have 100 trades, 200 trades, you can start to determine, hey, what would have been better over time? As an example to what I'm talking about, what I have found is, so if I'm buying something at this turn because I see the market is super crowded short and I'm getting long, okay, I get long. Hopefully the market goes up on my winning trades. The market goes up. I get out when that crowdedness is no longer there. Okay, because that's my edge. The edge is it's super crowded. When it's not crowded, I'm out. What I have found through testing is what would give me more P&L is if I just stayed long that thing until I got all the way crowded long. And then I got out and started getting short. That would give me better P&L. But from the point where they go neutral to the point where they get super long, my volatility goes way up, right? So it's not worth that extra unit of return per risk from the risk return point of view. And then, of course, if they're super short and now they're getting long, that is the trend followers, obviously, for the most part, getting long. Those are the people I don't want to be correlated to. So I want to get out when they're getting in, right? So I always say it like I've done my job at that point, and now it's their job, right? I don't think I have nothing against trend following. I think trend following is a valid strategy that's valid in people's portfolios, right? But my clients, for example, are mostly fund of funds that have trend followers in there, and they need something to offset that trend following, right? So I do my job. I catch the turn, and then the trend followers are coming. Okay, now they do their job. Like that's what having a balanced portfolio is all about, right? So, okay, maybe I could make more money over time if I held it the whole way, but that's not my job. So, and that's not what I do. And that's not what I'm optimizing for. I'm optimizing for risk adjusted returns as well as this correlation thing. So again, it depends what you're trying to do.
Exactly. There's a million different people trading, and there's a million different ways you could try to make money in the markets. And
also a million different ways, agendas, because like in a way, Jason's is not, like he was saying, it's not a maximizing agenda because he's got other considerations that he must take into account because he needs to be negatively correlated. Now, speaking of trades, by the way, this is what I'm interested in. Tom, how many trades a year do you do? You obviously, you guys all keep statistics. Just a round number.
Oh gosh, at this point with like 7 different strategies and any one day I've got hundreds of positions.
Right. So more than 5,000. Just
well, let's see. I could probably let me do this. There's about 250 trading days a year, right?
Right.
And let's say 25. How about somewhere between 6,000 and 7,000 trades a year, probably.
Yeah. So your brokers love you. My point here is the man versus machine conversation. Is Jason probably does 10 basis points of that. Like I don't know. I don't want to speak for you, Jason. How many trades a year do you do? generally?
Probably about as many as Tom does in a day.
I was like, for a second you had me there. You had me because you're going to tell me you do 6,000. There's no way you can do 6,000 trades. Yeah, no.
But I mean, again, remember what I'm doing. I'm picking, ultimately I'm picking market turns. How often does the market turn? And I'm not intraday turns. I'm picking, big market turns, right?
Yeah. So,
how often does that happen?
It doesn't happen that often.
Right. So therefore, you know what I mean? I'm not trying to do it too often, but I do I think this year, somewhere 35 to 40 trades, I think I've done.
Right. So that brings me to my point about knowing what it is that you do and how you do it. It's physically impossible to do what Tom does. I mean, maybe not, but you really have to be a complete, market junkie to do what Tom does non-algorithmically. You can't do 6,000 trades, a year. Maybe I could do it because I'm just an inveterate, degenerate trader, right? I do 100 round turns a day, but that's not the point. The point is that's impossible. That is why Tom's approach has to be algorithmic, whereas yours does not. 35 trades is not an extraordinary amount of round turns. It can be done discretionarily. That's my point, I guess, is would you guys agree with that?
Yeah, I would. Any one particular market and any one particular strategy, I could sit here and run it manually myself without any issues at all. And I've got enough experience that it wouldn't stress me out or anything. But trying to do it across, 38 markets with 7 different strategies and different time periods, and some of them are counter trend and some of them are trend following. My brain would just be fried if I could even pull that off. I dare say I don't think I could.
You would not be Mr. Serenity. You would not be Mr. Serenity. That's exactly
no, I'd be exhausted too. I mean, I wouldn't have time to go out and work out or prune my bushes or anything like that. It would be pretty much all day, long day. Oof, I wouldn't even want to envision that. Thank God for computers.
Let me just go back to what you said a few sentences ago. In order to do something like that, you would have to be a market junkie. First of all, I will argue that if you plan to make money doing this particular thing, you better be a market junkie. Okay. This is extremely, people don't want to understand it, extremely difficult. Okay. This is one of the most difficult things, not physically, mentally, psychologically, to do in the world. Okay. I'm not saying it's more difficult than being a fireman and going into burning homes and saving people's lives, but from a sitting, here working thing, it's one of the most difficult things you can ever do. And the success rate is very low. So while Tom might be out there trimming his hedges and doing whatever, trust me, and this is the first time I've ever met the man, he's a market junkie. He doesn't need to be doing this. He loves doing it. He's got plenty of money. He had a very successful career. He could put his money into
T-bills. Yeah.
You know what I mean? And go live the rest of his happy life and trim his bushes all day. You know what I mean? But he loves it. He's a market junkie. It's a game and you love it, right? And if that's not the case, okay, it's a puzzle, right?
It's a puzzle.
And you want to solve it, right?
And I never will.
No, and that's just it. It's a puzzle that you want to solve and you're never going to solve it.
Exactly.
But you're hoping to get closer each day, right?
It's like golf. You never shoot a perfect round of golf. You only get slightly better at it over time.
I think
that's not your approach, and if that's not your thought process to this, I'm telling you, do something else.
It's so interesting you say that, Tom, because my dad is just a golf fanatic, and I couldn't care less about the game, but I have to endure every single hole, every single description. And the man is 87. He shot an 82, so he beats his age, which is
nice.
Problem for him. But it's interesting that you say that because his obsession with golf is like my obsession with the market. Like that is I just realized it as you were saying it. Like it's literally the same compulsive obsession in a way. It's very true. It's just that we absolutely focus on the market, whereas like you said, golf is the same kind of all-consuming passion when people get into it.
I'm sitting there with 7 strategies and different time periods and wondering what's my 8th strategy going to look like. I'm always thinking about when I'm out pruning the bushes, or hitting golf balls, I'm thinking in the back of my head, what am I missing? What could I add to this to reinforce those periods that I'm not capturing very well mathematically. What type of market action is going to really be my Achilles heel, and how can I do something to protect that and exploit it maybe?
Oh, totally.
Yeah, I'm always thinking
After
of that.
40 whatever years of doing this, that's
50. 50. I'm older than you, Jason.
That's still what he's thinking about.
Yeah, it is. So speaking of, what do you think about it, Jason? Just could you run us quickly, maybe what your day is like? What do you do, on a regular day to kind of get to the point where you need to be in terms of trading?
What I should do or what I actually do?
Yeah.
What do you actually do?
What I actually do is I sit in front of this freaking screen 18 hours.
Right.
That's what I actually do.
Right.
And I don't need to, and I probably shouldn't, right? Because I put my trades on. I don't trade very much, and they're going to do what they're going to do. I know where my stop is.
Right.
You know what I mean? My process is going to tell me where my exit is, and I don't really have anything to do, and I shouldn't. But that's not what I do. I sit here and I watch. But one of the things, what I'm really watching, I believe most of the time, is really the correlations between assets over time. You can do things like value at risk, for this is all portfolio risk stuff. We've talked about individual trade risk, but then clearly you have a portfolio risk as well. I can say, I'm risking 70 basis points. I'm long the S&P, and if it takes out this level, I'm gonna lose 70 basis points. But if I'm long the S&P, the NASDAQ, the Russell, and the Dow, and I'm risking 70 basis points, then I'm not risking 70 basis points.
No,
right?
it's
180 basis points, right?
It reminds me of a guy one time who came up to me. He goes, "Listen, I'm totally diversified. I'm long dollar yen, pound yen, euro yen, and Aussie yen."
So that's what I mean. So so there's that portfolio risk aspect to it, and portfolio risk, what it really is the correlation between the assets that you have, right? And those are ever changing, right? You can run. They have the value at risk programs that will theoretically do that, but I have found those to be horrible. They work 85% of the time, and they don't work the 15% of the time that you need them to work, right? That's the story, and that's exactly what happens. So therefore, I think I can do a better job of that. At least, I don't know if that's true, but I like to believe it. And that's how I justify why I sit here all these hours, because I am watching the correlations between these markets, right? So it can help me. This is where I do have some discretion in my portfolio, is I may change the size of various positions based on what the correlation between the positions that I have on are. If I think that they're getting very correlated, then I will probably reduce the size of those positions by a little bit, knowing that my risk is higher than what I think it is, right? So that's really what
you can pick up in real time. That's why none of these all these correlation studies always tell you about they cannot pick that in real time unless you're just watching it constantly and seeing the change in behavior.
Right. So that's what I do. And fortunately, I would say for me, you were asking before about did the market wizards change anything? It didn't change anything in my business, because by the time Market Wizards came out, I was managing all the money that I wanted to. I don't take I haven't taken new clients on for like 6 years, right? I wasn't looking for new clients or anything like that. But because of the Market Wizards, we started this thing that has this Discord page, and so I'm on that Discord page all day talking to these people, which has been just it's something I didn't know. I didn't even start. Someone else started this thing, proposed it to me, and I was like, yeah, let's go. I didn't even know what Discord was. You know what I mean? But I'm on the Discord, and we have had some incredibly interesting people on there. Some really good and some interesting stuff, and people that are looking at stuff. And so I'm on there learning, quite frankly, from some of these people. The goal is to try and teach people, and I like to think that I am doing some of that. I don't know everything. I can only teach them what I know. But then all of a sudden you get a community of a lot of people, and they know other things, and I'm sitting there most of the day talking to them, and we have some fun on there too. We put some music on, all that kind of stuff.
Nice. Like it's definitely a lot more fun to trade with other people. It can be a very lonely game if you don't have some community.
Yeah, so that's what most of my day is. Now around that, I do try and my day has always been about, because I first started trading in Hong Kong when I was in my early 20s. I was living in Hong Kong, and that was where I first started trading. My internal clock to this day, I wake up every night on the Hong Kong close. Okay.
Which is like,
I don't even trade on time anymore. Right?
Is it 3 a.m.? What is
4 a.m. 4 a.m.
4 a.m. Okay.
I wake up every day on the.
I'm there with you. I'm there with you. We can text each other. I'm there with
you.
you.
I get up, I check, I look what's going on, right? And because of that, the market closes at 4 o'clock. By 4:30, I'm asleep.
Yeah.
Right. And I'll sleep from 4:30 to 7 or something like that.
Right.
And then I'm up usually 7 till about midnight. Midnight I'll go to sleep. 4 o'clock I'll wake up for half an hour, and I'll go back to sleep 4:30 till like 7 a.m. when my wife gets up to go to work.
Nice.
That's kind of my day. And within that, I'm always struggling to get away from the screen, and because I'll just sit there and be like, look, there's nothing every day. There's nothing I can do here. The thing's either going to go up or down, whatever. So I'll go over there and I'll play some guitar. I try to get away. I try to play some guitar.
Nice. And I know, Tom, you have a much more methodical approach where you do a certain amount of time in the morning and then you go do lots of your own activities, right?
Yeah, it takes me about 10 to 15 minutes to check everything that's happened overnight. And usually there's somewhere between 10 to 20 trades that have already occurred overnight. And so I just adjust spreadsheets, make sure that I've kept track of everything, make sure I didn't make any mistakes or my software didn't make any mistakes, that type of thing. And then it's pretty much take care of other things, do an interview here and there, just put away the snail mail in the files, do some computer maintenance, upgrade software, go out in the yard and do some things. We're trying to consider doing a hot tub. So I'm measuring the exact with flags in the yard, trying to figure out where exactly this thing's going to sit and how are we going to build a pad for it and everything else. So a job like that, I might be outside, get a little sun and fresh air for an hour.
Right.
Then I come back in after lunch, of course, Arizona time. So we're a lot earlier than you guys in the big cities over East. I'll have about a 40-minute to 45-minute, something like that, process. I call it the afternoon process, that data is available. I'm now applying all my algorithms to it. Some of it's more automated than other parts. Some of it's more spreadsheets that I've got to update. Parts of it is just completely automated. It generates the orders. I review them, transmit them individually. And I'm transmitting a good 100 orders or more. So it does take a little time, but I've got a graph over here and the transmit button over here. And I'm just going, yeah, that looks good. That looks good. That looks good. And it's pretty fast and straightforward, and it doesn't strain my brain too much. And then I'm done. I close down the computers and.
So when you're bleeding, let's say you're 15% off equity highs. Does it get harder to transmit those orders? Like, is it like, these bastards better be right this time? Do you have that
not after 50 years of doing it. Yeah. I have been through so many drawdowns. I can't even remember how many. And I just had a 10% drawdown right through the election. It got really bloody overnight there.
Yeah. I remember you were long, and then it whipsawed you out. No, you got short, and then it got long again, so it totally whipsawed you out.
And now I've ripped off about 6 days in a row of the biggest profits that I've seen in a long time, going back to maybe COVID rallies or COVID crashes. That was probably even faster, but we've had some really, really good days the last 6 days, and I'm almost at equity high again. So, when I'm in a drawdown, I'm mentally remembering those periods when I was at equity highs. And when I'm at equity highs, I'm kind of remembering those times when I was in severe drawdowns. And what it does is just kind of keeps you nice and flat. Right. Maybe that just comes with having lived 50 years in the business and trading, and you've kind of seen it all, and you sort of it's another day in the funny farm, so to speak. You don't get high or low as much as just sort of watch Tom trade. It's like you're detached from it all. It's just what I do every day, and then I go on and do other things.
Right.
I think something that a lot of people do, they label themselves a trader, and I think it'd be more mentally balancing to view yourself as a person who does a lot of things, one of which is trading. So, I'm kind of a landscaper. I'm a golfer. I cooked dinner last night. It was really delicious. I make wine during the summer up in the mountains. I do a lot of things.
Unfortunately, you're talking to Jason and I, who, aside from maybe cooking and guitar, which is what I think, have no life whatsoever. So it's falling.
You guys got to come out. You guys got to come out west and enjoy your life.
I don't cook. It's such a great attitude that Tom just expressed. When I'm having my equity drawdowns, I'm remembering when times when I'm at highs and when I'm not. It's such a great attitude. I wish I could have. To me, when I'm having a drawdown, what I'm thinking is, okay, this is it. Game over. This is going to be the one that I blow out. And when I'm making money, I'm thinking, I'm about to have a freaking draw. Like I'm just a miserable bastard. So, I was just talking to a friend of mine about this just last night. We were having this conversation how that's for a lot of people, especially miserable bastards like me. That's how it is, man. There's no happiness in this game because you can't rest. As soon as you're making money, all I'm ever thinking about is that just means I'm going to be losing money soon. I get to the end of the year. And I haven't had a down year in quite a long time. But somehow I get to the end of the year, and that's when I get paid. And my clients will send me a check, and I'll be like, "Oh, this is great." I don't think I remember having one winning trade this year. All I remember is losing trades, and I got stopped on this and that and the other thing. How the hell did I make money this year? I don't even know. I don't remember having any winning trades over the course of the year. I remember, oh my God, this one, and my stop was here, and it gapped through my stop, and I got this huge slippage on this trade. How the hell? You know what I mean? Like those are the things that I think happened here, but somehow I don't even know how. Somehow here it is. I'm getting paid a check because I made money this year. So Tom's attitude is clearly much healthier than mine. But what can I do? I'm just a miserable bastard.
Yeah. Well, as miserable bastard as you are, we'd still love to pick your brain, because the last question I have for both of you, and we'll start with Jason, is just let's talk markets, because Jason's got the best intelligence in the world, in my opinion, even though he's going to totally poo-poo it. Where are things standing? I mean, I'll tell you how wrong I've been calling the top for the last year and a half. I've been wrong. Fortunately, I don't trade my opinion. Thank God. I've learned not to do that. But generally, let's just go through the big ones. S&P, NASDAQ. Actually, let's talk NASDAQ. What do you have any vibe on NASDAQ at this point, or is it sort of neutral as far as positioning goes?
Well, let me ask you this: you've been calling the top for a year and a half. Why? Based on what? What is it that was making you call the top?
You know why? This why I don't take myself seriously. Overvaluation.
It's an important point. It's an important point. So
yeah, overvaluation. This has got to stop. It's going. It's like what's that? I forget. We're like 25 earnings. Basically the usual fundamental excuses we give.
Macro fundamentals.
The economy is going to slow down. Earnings are going to compress. The other one is interest rates are going to expand, so the PE ratio is going to compress. So that
macro fundamentals.
Yeah, macro fundamentals. Right.
So, as I would look at it, I feel like that's what the vast majority of people were thinking, for those same reasons. I just had a friend of mine who's a broker. He was my very first broker in my life, retail broker, when I was in Hong Kong. When I placed my first buy one Hang Seng Index futures contract trade, he was my broker.
Right.
30 years later, he's now an institutional broker doing, hedge funds and options and derivatives. And so, but I've talked to him, God, maybe not every day, but 2-3 times a week for 35 years. We grew up in the business together. We took similar views on how markets work and observations. He wrote a thing this week, and he has not been bearish this whole way, nor have I. He wrote a thing this week. What if all the pundits who missed the extended bull markets because the Fed was too loose and flooded the market with easy money, government deficit spending had to end badly, But all the while, American consumers continue to spend. Unemployment stayed at historical lows that perpetuated the U.S. markets to consistent all-time highs. What happens if now, with the Dow 43, S&P 6,000, they start to capitulate because a new business-friendly administration with control of the House and Senate start to get bullish as a new administration comes in, wants to shrink government, cut spending, and impose tariffs that they could be getting bullish right at the top. I feel like we are very close to that now, if not there, right? I have been waiting for this, right? Where was the bullish capitulation ever going to come? Because it was never coming. Everybody was bearish this whole freaking way up. They wouldn't capitulate. We have a possible capitulation here because of the Trump thing, right? When Trump was elected the first time, people didn't know what the hell it meant. The stock market was in a semi-crash overnight after the election. By the time we woke up, the stock market was flat on the night, and we never looked back, okay? So this time, nobody was going to short Trump. They wanted to buy Trump, right? I have a client who I also consider a very good friend who has been bearish this whole time. He's a very, I'm not going to call him very right-wing, but he's a conservative guy. He's a Republican guy. He has hated the market for the last 2 years. I always believe because he hates Democrats and he hated Joe Biden and all that. He is now bullish for the first time in 2 years because the whole Trump thing, and he thinks that Trump is going to save the world. And I'm not saying that Trump's not going to, okay? I hope he does, quite frankly. But he believes in all this, and now he's gone bullish, right? We had one of my favorite fades come out, and this guy has been bearish forever, okay? And shorting everything from S&Ps to NVIDIA to everything for the last 2.5 years. He came out on Wednesday. Okay, on Wednesday, midway through the day, I watch. He does a video every day at 1 o'clock. At 1:11 p.m. on Wednesday, he said, "For those of you who are trying to short, now is not a good time to be naked short anything." He said that on Wednesday. This guy has been short everything for 2.5 years. I'm telling you right now, my stuff is set up to short anyway. I need a market to confirm it before I'll do it.
Right.
I shorted some S&Ps on that statement. Okay, not a lot because that's being a wise ass, but by the time it closed, the market did confirm, so I was able to get short my real position size. But we're starting to see stuff like that. Does that mean we just hit the exact all-time high? No, but I think the odds have, without a doubt, changed here, right? I've heard consistently since the election. The biggest thing I've heard, and I don't want to rip too much on people, and I never mean this stuff as a rip. I am just trying to gauge what consensus is. People take it personally. I don't mean it personally. I've heard this now ever since the election, and we just heard it from your 3 previous guests, just by the way. And I happen to love I only know 2 of them. I think they're great, but they all said the same thing. Oh, I think the market can go down, but not until January.
Right. Well, I
hear that every day now. Every day from everyone, from all the people that have been bearish, from all the perma bears. That's what everybody says. The market cannot go down before year end because we get the Christmas rally, because years don't go down into year end. And that all might be true. It might be true, but to me, the risk reward here for the very first time in a long time for me is the other way. That's what I think. And it's just a trade, that A could be wrong. And B doesn't mean the market's about to crash. Doesn't mean that was the all-time high for the world. I mean, at the end of the day, shorting the stock market is the worst trade that you can ever do over time. It's the only market that you can point to that has upward drift over time, right? So shorting it is just horrible. It's horrible. I hate doing it. It's horrible. But in this particular case, I think the risk reward points to that right now. And
I went into this last week net long, and I came out net short.
Right.
Now, is it just purely algorithmically, just Tom, in terms of you kind of like you hit
the longer term ones are still to the up direction, and the short term ones started kicking in really quick right around Wednesday, Thursday, definitely Friday. The Nikkei was down 1,500 or I don't know what it was. Yeah, it was down on Friday. It was way over 1,000 last I looked. I don't remember where the close was, but some of these indexes around the world are.
See, that's such an interesting thing, that the fact that you expose yourself, not just I'm as guilty of this as anybody else. I have such U.S. centric eyeballs, and even everybody who trades with me globally, pretty much these days only trades the U.S. indices. Like everybody trades the Nasdaq, whether you're in Kuala Lumpur or in Cambodia or in Karachi or in Maine. You're just trading Nasdaq, right? So. It's hard. We don't see sometimes the weakness shows itself on the edges, and we don't see that because you're exposing yourself by trading all those markets and being much more aware of it, right?
Right. It also helps give me a sense of what's happening out in the world. What are other economies doing? How do we in the US compare to, say, Europe, and how they're doing economically, and Britain with the Brexit, and it just gives me a little bit of a world sense of things just by glancing up and down my screens and seeing what markets are doing. Things like commodities are sometimes worldwide markets. Sugar's traded in a lot of places, cocoa from Africa, copper. I trade iron ore in Singapore. There's a lot of different things going on, and you get a sense of some of the industrial metals and the precious metals and what the currency markets are doing and the debt markets are doing. And you get a sense of a lot of different aspects of a macroeconomic environment. But as Jason points out, and you pointed out earlier, I don't even trade my beliefs. I mean, I just have math, and to guard against anything, I just take that stop and I stick it in there, and it gets executed, whether I'm out trading, trimming the bushes or sitting here in front of the computer. It happens no matter which way. And, I find out about it at the end of the day when I sit down to do the afternoon process and get all my positions listed properly, make sure everything happened the way I wanted it to happen, and make any corrections that I have to make if an error has occurred of some sort. And it's pretty interesting to see that perspective of the whole world and what's going on. But I have to agree with Jason. It seems to me, right around Wednesday, it looked like a lot of stock indices. I trade the IFO over in Europe. I trade the Nikkei. It just seemed like all of them were starting to look a little on the downside. And when you see, after such a long run and so many people finally getting, really patriotically bullish after the election, some people almost, really, really punch drunk with how important the election was and all that. And it may, like Jason said, I hope Trump makes the whole world a better place. Why not? What human being wouldn't want that? It would be illogical, especially a guy like me in retirement. When he talks about the golden years for the U.S., hey, I'm in my golden years. I would like to think that the rest of my life could be spent in a wonderful place. But the reality is sometimes things are tough, sometimes they're good. But you cannot. The market will do what the market will do. If the market's been up for so long, and then everybody starts panicking all of a sudden, it's going to get very crowded. To use Jason's report, it's going to get crowded at the exit. There's going to be a lot of people panicking, and my studies would show that markets go down, stock markets go down, and particularly at maybe 2.5 to 3 times the speed that they go up. So it gets to be very fast and bloody, and it sneaks up on people, and man, it gets crowded at the exit door, and then you get a whole bunch of people swearing off the market. I'm never getting in the stock market again. I lost 50% of my money. Blah, 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 blah. It was my broker's fault, or my brother who told me to get into the market. He's an idiot. I'm never going to talk to him again. And then, then we're ready to start the process of going higher again. And Jason can call the next bull.
So, I'd make a few comments. The idea that the market goes down so much quicker than it goes up, I think, is why, despite the fact that the market goes up over time and it's obvious and there's upward drift, that's why people love to short so much, right? I call it the heroin effect. I think shorting the stock market is very much like being addicted to heroin, okay? Because it probably feels good, I've never taken heroin, although I have shorted the stock market a lot and lost money doing it. But, you know, it feels good, but at the end of the day, it kills you, right? And ruins your life for that matter. So I think that's why people love to short the stock market so much, because it does go down so much quicker than it goes up. And you feel like a hero. It's like the hero effect when you catch a short. But having said that, if in fact, and I don't know, if in fact the market is going to go down, right, it's still difficult, because the problem with bear markets, you know, they're so hard to trade because they always have squeezes higher. So you got to be willing, if you're going to sit here short, you got to be willing to sit through some fantastical squeezes higher during it, because it's going to make it look like it's a bull market all over again. And you're going to go into the idea of, oh my God, every time I've shorted, this is what happens. I better get out. You know, it's going to force you out of those shorts. Trading from the short side is so freaking hard. I don't think that people should really do it. If you're bearish, then, you know, cut your longs if that's what you want to do, right? I think trading from the short side is so difficult. And not only is it a difficult trade, if God forbid you actually make money doing it, now you're screwed for life. Because now you are addicted to the heroin. And now but I've done that, and I know almost everybody I know has done that. Okay. Right. There's nothing better than the feeling of making money short the stock market. You're the hero. All your friends are sitting there at dinner crying because they're losing money with their investments. And you're like, oh, I'm a freaking hero, man. I killed it today. Right. It's the most addicting thing there is. And it's the worst trade over time that there ever is. So as much as you make on this one particular short trade, there's a 99% chance you're going to lose it back over time anyway. So,
okay. A little confession time, because what Jason is saying is just hitting too hard to the stone. But I'll say this: so I was raised during the '87 crash, right? Which there's a couple of interesting points about that. First of all, the '87 crash, which I survived, the Drexel Burnham like live. To this day, just like you know the Kennedy assassination. You remember everything about that day. Had the greatest, to this day, still the greatest rally you've ever seen. Nobody ever talks about it, but from around 11 o'clock in the morning till about 2:30 p.m. we rallied something like 200 Dow points, which at that time was like a 10% move to the upside before we died back down and just, you know, closed in a pure like, you know, destructive moment. But the point was that did always instill in me the love of being short, which has been huge detriment. If I just simply been an accountant and put all my money into an IRA ETF and never looked at it, I probably would have had a lot more in my IRA than me trying to screw around, trying to hit tops and bottoms. It's actually
if you put it in a NASDAQ IRA, you would definitely have more money.
Yeah, exactly, 100%. But it's really funny. You are very much formed by the experiences you have in the market. I think it's a really, really good point.
And you know, in 08, it was the same thing. I can remember 08, okay, when things were crashing. We'd come in the morning and the S&P was down, whatever, would gap down something, 2-3%. And by 10 o'clock, it was up on the day.
Right.
And by 4 o'clock, it was down 10%. You know what I mean? Exactly. But if you think that it was easy to wake up, you're short the S&P, it's down 3% when you wake up. And by 10 a.m., it's up on the day. You think it's easy to keep that short on?
No.
Okay.
No. 100%.
You're kidding yourself, man. Trading the short side is so freaking hard. Not only is time against you, but even when it's working, it's hard.
Right. And I will add one other thing that, you know, Jason, you were saying the reason why people get so attracted to it because of 2.5 time decline that Tom was talking about, but it's also the reason why almost nobody makes the money on the long side. You know, when they did the studies of regular retail traders, their average return, even though they were long only traders, were like 5.5%. They basically lost fully 5% because everybody gets scared when the market sells off and they basically sell at the bottom. They have to, you know, buy back in and rebuild their equity. So
I mean, I had a woman hit me up just about at the lows in 2000. What was it down here? 2022. Just about at the lows. It was somewhere around within 3 or 4% of the lows. She was this woman that I was friends with, who was actually the wife of a guy who played in a band I played in. Right. I hadn't talked to her in, I don't know, 3 years. I haven't been in that band since I moved up to Rhode Island. I hadn't talked to her in 3 years. She just all of a sudden calls me up and she's like, oh my God, what the hell am I going to do? Oh, my retirement money. I'm sick of this. I'm sick of losing all my retirement money. I'm getting out of all my investments in the stock market and all this stuff. What should I put my money in? I'm thinking about putting it in the BlackRock real estate fund, which everybody at that time was buying because it was up that year. Right.
Right. Yeah.
And I was like, listen, honey, you do what you got to do. Okay. But I'm just telling you, now's not the time.
Yeah.
And that was right there at the bottom. Like they say they don't ring a bell. Okay. At the top and bottoms, but the truth is they do ring a bell at the top.
Yeah.
Jason, I was in a dentist appointment and I was just getting my teeth cleaned that day. And the dentist, who normally doesn't see me when they're cleaning my teeth, comes in at the end of my appointment, distraught over her broker account and the pension for the whole dental office with everybody's got shredded. And they were losing money hand over fist and all that. What do I do, Tom? Because didn't you do something in the money management stuff way back when? You know, I seem to remember you, I don't know, you do something like that. And yeah. And I look at it, it's no plan, no risk control, no nothing. And, you know, what?
Yeah. It's almost malpractice. Yeah, I know.
I mean, if you bought the idea,
it's already out. You might as well close the door. It's like, I don't know what to tell you.
If you've bought into the idea that you should be putting your retirement money into the stock market over time and dollar cost averaging over time, if you bought into that idea, then clearly you must have seen that there are times when you have 20, 30, even 40% moves against you. Like one goes with the other, right?
Exactly.
But for some reason, it's like you say, that's all great in theory, but you know.
But actually, the theory is awesome. Like if you actually follow that plan is the greatest plan of all. You don't even have to do any fancy, 8 strategies, mean reversion that Tom is doing. Yeah. If you just literally, this has been buy the dip for the last 30 years. If nobody does that though, nobody's able to
130 years.
It's all about, trading to me is like Jason said, it's one of the most difficult things you can do, but a lot of it's because of the mental side. If you can't stabilize your brain and understand the good and bad, I do it more with math and statistics and computers. Jason does it by sensing, switches and getting little tips from ladies that call him in the middle of the night or whatever. But whatever the technique is, it's kind of still comes down to your own mental capability of knowing yourself, knowing the risk you're taking on, knowing the potential reward that awaits you if you do it properly. And if you don't have your head screwed on straight, the markets will just rip you apart.
That is what makes it hard. I mean, trying to figure out a process that makes money over time. Okay, that's hard, right? But that can be done. I actually believe it doesn't even matter what your process is. What matters is, are you disciplined? Can you handle this cycle? The psychological part is the part that makes it so incredibly difficult. Exactly. And I would argue with one thing that you said, if you don't have your head screwed on straight, I think if you have your head screwed on straight, you're going to fail because the market is illogical relative to other things that you see in life, right? You actually have to have your head not screwed on straight.
Okay.
And I thrive on it. People tell me all the time, you're a freaking lunatic. My wife or family, they laugh at me. Everybody's always laughing at me. I make jokes. To me, it's all just for fun. But like, you're freaking crazy. I'm like,
my wife has every now and again says, you don't want to be in Tom's head.
No, that's right. And that's how you have to be in this game. And most people fail at this game. And that's because most people are normal by definition, right? If you're normal and you think normally, this isn't going to work for you. The market is not normal because it's a discounting process, right? Yeah. It's not like everything else, you can make a prediction about the future. Donald Trump's going to win the presidency and be right. But that's not the point, right? The point is what's discounted in, right? And the market is a discounting process. So your ability to say what I hear guys say it all the time. The guys that were bearish. Oh, we were right about everything what we said.
Right.
We just got the price of the asset wrong. Okay. Well, that's the only thing that matters, dude. Like, I don't care how many of the macro calls you got right. Oh, you said retail sales was going to drop. You said employment was going to go up. Well, whatever you said. but you got the price of the asset wrong.
You got the trade.
That's what we trade. We're not trading futures on GDP, right? We're trading futures on S&P or whatever. Like, that's what you have to get right. But that's how people justify it. Oh, everything we said was right except for our forecast on price. Okay, good.
Except the actual trade that matters, right? That's absolutely true. That was the classic Jane Street trade. We Sam Bankman-Fried, who went to jail before that, was a proprietary trader. They had figured out the Trump trade in 2016, way ahead of everybody, made the bet. And unfortunately, they just made the bet on the wrong. They made a bet on the S&P, and the whole thing was like, yeah, we had the result figured out right, but the trade wrong, which is exactly what you're talking about.
Right. I'd rather have the result wrong, and I'd rather have the idea wrong and the trade right. I mean, like I say it all the time: be wrong, make money. And the market, if you just listen to the market instead of listening to yourself, that will help you do that, right? Hey, I think everything's going to go straight down. You know what? It just closed at new all-time highs. Okay, well, then I'm going to get long. You know. Be wrong, make money, right?
Exactly. Gentlemen, I pushed everybody well above limit, so I definitely taken advantage of your time. I want to thank you again. You have been troopers, and thank you again for coming back. We've had over 3,000 people here. They're just hanging on your every word. They're telling me this was one of the best contests they've seen on YouTube. We're definitely going to cut this. We're going to give it to everybody. You guys are we're certainly going to share everything with everybody. Everybody go to Crowded Market Report, Jason. Everybody follow him. Amazing Twitter feed. Really, I'm telling you. He's been prophetic, and I would be shocked. Now I'm not going to jinx you. I'm not going to say a word. I don't want to jinx you because, he's always going to. So he's great. Just go follow him. He's got great ideas. Tom has a beautiful website called
enjoytheride.world.
Right. Enjoytheride.world, which is a great
.world.
We'll be sending
with all the positivity over there.
Right. We'll be sending you guys the link to all of that in the post event. So thank you, gentlemen, very, very much. All the best to you. Enjoy your Saturday. I have tortured you long enough, but you've really provided us some amazing stuff. I want to thank you again for being such great participants. Thank you. I'm just going to take a few seconds here.
Hey, Tom, great to meet you, Tom. You're a legend.
Yeah, good to see you there. What city are you in, Jason?
Sorry?
Are you New York or Chicago?
Rhode Island.
You're in Rhode Island?
Yes.
Oh, wow. Okay.
Jason?
I have my business partner in CMR. I really should say the guy who started CMR. He's from Arizona, so if I get down there, I'd love to call you up one time and trim some hedges with you.
I will give you guys the connecting information, so you guys will definitely connect. Absolutely.
I follow Jason on Twitter or X.
Yeah, so. He's great. Thanks, gentlemen. I'll see you later. Take care. Bye-bye. All right. One more second of your time, guys, because I absolutely want everybody who is at the show to get all the free gifts, especially the trading tools. If you're a MetaTrader trader, which I'm sure like 90% of you guys are, as you said in the thing, just hit the box over here. You just have to hit it over here and get the MetaTrader for free. I showed you all the stuff that it does. It's amazing. I actually showed you only about 50% of what it does, so it does even more so. Go ahead, please download it, enjoy it. Feel free to contact me. But aside from that, our great friends at Eightcap have put together a very, very good package for you guys, which is amazing. So let me just want to walk you through it. A tiny little deposit, a basic deposit, is going to give you the Flash Trader for a whole year, not just for 30 days, but for a whole year. Going to give you Nick's 23-page fundamental analysis cheat sheet, Kathy's trading session course. You know how Kathy, we didn't even get a chance to talk about how she trades fundamentally and how she trades all her effects, how she's been consistent for 10 years. This is the course that teaches you how she does that. Jason's Crowded Market Report, which is awesome, which tells you exactly where he's picking his turns. Tony's futures book, which is really, really good. Binni's Alien Watch setup. I didn't even get a chance to tell you, but Binni is short the NASDAQ, which is awesome because she's sort of very much in dovetails with that. And then Tracy and Jimmy's damp market bi-weekly report. So all of that just literally for a basic deposit. But if you want to go for a little bit more interesting, you can get between $2,000 and up to $5,000. You're going to get lifetime access to Flash Trader. You can use it anywhere, anytime, anywhere for the rest of your life. That's amazing. That thing alone is going to just totally change your life for nothing, just for opening an account. That's all it is. That's all. Just open an account. You're going to get Kathy's Forex Fundamental Fast Track course. Then we'll also give you all of our indicators and live trading with me. If you want to be the degenerate trader that I am, if you want to scalp with me every single day. And the coolest thing is, with the new flash trader that I'm giving you, you're going to be able to scalp the way I do. In other words, it's going to fully automate the entries, which I cannot myself do at this point on any of your CFD accounts, all of your, of course, all of your Eightcap accounts for sure. So that's going to be really, really neat. And then finally, if you want to do the gold, you're going to get everything that you get before that, plus the very, very, very comprehensive bootcamp course that Kathy and I have put together, which is 40 different videos, $5,000 worth of stuff, free. Now, all this is free. You have to do nothing. All you got to do is just open an account and simply get that stuff. $7,700 worth of stuff, plus Nick's Edge Finder. I don't know if you saw all of the incredible fundamental screens he had there. That is what he uses to basically kill it on his long-term accounts. Amazingly cool stuff. In terms of products. Oh, and I totally forgot. On the $5,000 one, you're going to get 2 months of Blake's Forex Analytics. Remember, Blake was showing you how they generate all those trades, how they generate all those trade signals, all those trade ideas that you get as well. So hopefully you guys really, really enjoy it. It's been a blast having you guys in the room. I want to thank you so much. I know I pushed it a little bit beyond our limit, but it was really worth it. We had amazing, amazing content. Thank you again. Eightcap does not take U.S. accounts. That's the only drawback. I'm sorry about that. But of course, everybody who's a U.S. customer, feel free to download Flash Trader. That's available for everybody. And if you're interested in our services, just come back and email us directly, and I'll help you. And I'll help you get discounts and all the other services as well as a U.S. customer. But everybody who is not U.S., you are all absolutely privy to all of this goodies, and I hope you guys all take advantage of it. I want to thank you again for everything, and I hope you guys really enjoyed this. We'll definitely do more of TraderFests in the future. This has been a really great experience of having do this on YouTube. A tremendous amount of people coming by. Please follow us on YouTube /BK Forex. If you want to live trade with me, I'll be there Monday with bells on. I'll be ready to rock and roll. Anthony Crudele, YouTube. Karen Fu, of course, YouTube. And who else do we have? Austin Silver FX on YouTube. And of course, Trader Nick FX, tremendous YouTube channel. All those channels, I'll make sure that when we send you the post-event stuff, everybody's YouTube channel is there so you can subscribe to it, as well as all of their Twitter feeds. So hopefully you guys got something out of it. I really enjoyed putting it together. I learned so much. I hope you guys did too. I want to thank you. I'll see you guys in the market. This is Boris Schlossberg for TraderFest. Over and out.